is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
Have we achieved a soft landing? Has the Fed kind of done its job?
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Fears over a broader regional war in the Middle East.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. None of us have seen Moana. Lisa, have you seen Moana 2?
I have not.
Good. No one in the room. Julian, please, have you seen? No one in the room has seen Moana 2, and Bob Iger's upset about it. We go to surveillance entertainment correspondent Paul Sweeney.
Yeah.
The movie saved it for Iger, right?
Yeah, it was a good, solid quarter. They beat numbers. I think the expectations were pretty low, Tom. They were kind of highlighting that their hurricanes had hurt their theme parks, but the theme parks did pretty well. The streaming business is profitable, and Moana too, Tom.
They're 45% off. When you said, Tom, shut up and buy it, I didn't. Okay, they're 45% up from the ugly bottom. Iger's still on board. For all of our listeners and viewers that have been in this for decades, the emotion that Disney brings, can they get back, Paul Sweeney, to their former glory?
I think they can, and simply because they have some of the best assets, some of the best intellectual property, all the franchises that they have. So I think the answer is yes, although Bob Iger really needs to have a successful succession plan in place sooner rather than later.
Like on a conference call today.
Maybe.
We will have to see. We say good morning to you on your commute across the nation on Apple CarPlay. Good morning, 99.1 FM in Washington. I talked to Anne-Marie on the phone yesterday. She was ensconced at the Gucci across from the office down in Washington. And I just said, AMH, do you get a quiet day on Saturday or Sunday?
No.
They're all going 24/7
Yep.
down. Have you had a Gura sighting in like a week?
Have not.
He's fallen off the face of the earth, I say.
He's in the bunker somewhere.
Yeah, exactly, aren't we all? We'll have that news for you, of course, on Washington. And then, of course, on YouTube, subscribe to Bloomberg Podcast. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
And we've got futures falling. Tech stocks disappointing. We'll start with shares of Google parent Alphabet down 6%. Cloud growth stalls. Spending surges. Then you go to advanced micro devices. Their shares down 8%. Gave a disappointing outlook for AI growth. So we start with NASDAQ futures. Right now down 0.8%, 178 points. We go to S&P futures down 0.4%, 27 points. Dow futures down 0.1%, or 44 points. We have the 2-year yield at 4.19%, down 2 basis points. The yield on the 10-year, 4.48%. That's down 3 basis points. And we have the Bloomberg Dollar Spot Index down about 0.2%. Since tariffs still on the mind of everyone right now, we'll go to the Mexican peso down 0.2%. Canadian dollar up 0.2%. We go to the Chinese yuan up 0.1%. The euro up 0.3%. Over to Bitcoin right now, it's up nearly 2% at just over 98,000. And like you said, we have to go to Disney. Earnings shares up more than 1%. Yes, Moana too. Higher income though from those higher price streaming services. That really helped Disney top those estimates. Profit from TV networks, that slumped a bit, and theme park earnings, they were little changed. We go over to fast food, where shares of Chipotle down 5%. Ooh. Sales rose less than expected. Competition also ramping up with those aggressive discounts. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Yesterday we had some great conversations. James Steele on gold.
Yep.
Was really
great. I love talking to him.
And Eric Winograd from Alliance Bernstein on China.
Yep.
I learned a lot. Today we're going to get back to meat and potatoes, and that, of course, means equity strategy. Julian Emanuel's definitive. What you don't know inside Global Wall Street Baseball, working for Ed Hyman, he's got the advantage of the whole Evercore ISI game. But what's important is he puts out a note every morning on the earnings season and how we're doing. We have him for an extended conversation this morning. Julian, that research note you put out, how are we doing on revenue and earnings, growthiness, and surprises?
Let's call it good, not great. It's sort of,
double digit?
Close. You're nudging towards double digit. There's a hope that by the end of the season that we'll be right there. Revenue, solid, nudging towards 5%, which is pretty darn good. But in general, it's probably less than expected. We kind of thought that the surprises and the biggest aspect was the strength in the dollar. That sort of dampened, and you're certainly seeing it in commentary, But again, with the dollar, the question here is, what's the sense of permanence? It's
when you get to stand
temporary.
at the table with Ed Hyman, and he's got the black Sharpie, and he's marking up, the famous Ed Hyman reports. Do you and Mr. Hyman extrapolate out this earnings excellence?
We do. For us, 2025 looks like it's going to be in the neighborhood of 10%.
Double digit.
Yeah.
That's Wall Street talk.
That's right. Exactly. So, Julian, I mean, for the longest time, technology has been the driver of this market. Can we still expect technology, broadly defined, to lead this market higher?
Well, we think the answer broadly is yes, but just getting back to earnings for a moment, the positivity around 2025 is that, and we started to see this happen at the end of 2024, is the other 493 stocks in the S&P 500 have started contributing to positive earnings growth, and that's something we expect. But on balance, when you think about how a bull market sort of evolves and you think about the stages of a bull market, and what we've yet to see is that stage of capital markets enthusiasm and an element of emotion and FOMO, which happens toward the latter stages of every bull market. That tends to be led by technology, the leaders, and we think we'll get there at some point.
We had some pretty good performance in January coming out of some of the European markets, which had typically lagged the U.S., so it suggests that maybe some of the non-tech aspects of the market, maybe some investors looking for value in January. Is that something that's got some legs, do you think?
So to us, that is a geopolitical dependence there.
Okay.
There's no question about the fact that given the runaway move in the dollar into the end of last year, we started getting questions from longer-term value investors. Is it time? When's it time to start shifting? And we've seen that. We think you're going to need the catalyst. The dollar has started to stabilize, which is a positive, but we think you're going to need to see a little bit more of a geopolitical catalyst.
Okay, you go back to the 1300s, the 14th century. That's when Ed Hyman was writing for C.J. Lawrence. You use the word repetitively of all these worries out there of unlikely. It's unlikely the Fed is going to screw it up. It's unlikely we're going to see this. It's unlikely we're seeing. Explain to us how we should handle all these unlikelies we're juggling every day. There'll be a new one tomorrow. I don't know what it's going to be.
Well, if you look at the headlines, there was a new one about 12 hours ago at the press conference between President Trump and Benjamin Netanyahu.
What do we do with the unlikelies we're drowning in now?
What we do is what we've done for a number of years now and try and parse out the noise as much as possible and concentrate on the fact that, as you said moments ago, we're going to have close to double-digit earnings growth. And although stocks are expensive, valuation alone does not end a bull market.
Buried in your note, Hyman doesn't get down to the bottom of the Julian Emanuel note. It's just too long and too dense. You go right at share buybacks. Explain to us, forget about Apple. There's other share buybacks in Cupertino, right?
Absolutely. So when you think about buybacks and you think about this world we're living in of uncertainties and likelies and unlikelies, the question is, how do you manage an environment where by definition you're going to have greater volatility, okay? And even if we didn't have this political environment, at these valuations, you're likely to have greater volatility. The answer is you want to own companies that can buy back their shares, because that defines the concept of volatility management.
On a Wednesday in New York, the nights are good. You see the sun is setting later?
Yeah,
It's amazing how that is. Like after 5 p.m., we welcome all of you across the nation on your commutes. Good morning on Apple CarPlay. Good morning on Android Auto. Google out with earnings. Lisa nailed that. We'll talk about that here in a moment. And we say good morning on YouTube as well. Subscribe to Bloomberg Podcast. They mentioned podcasts 3 times in the Google ballet yesterday.
Sure.
They didn't mention us.
No. Okay.
I sat there with a beverage of my choice in my hand going, come on, mention Bloomberg surveillance.
Yeah.
They didn't.
Growing, though.
Continue.
Growing. Julian, how do you feel about valuation in this marketplace? I mean, you could make the argument that this is a really rich market. Now, if I pull out the Mag 7, maybe less so. Should I be concerned about that?
You should be concerned about that.
Okay.
And actually, for us, virtually every conversation we have with clients basically starts with walk us through the parameters of valuation. And my concern with the evolution of the bull market is when that stops being question number 1 or 2,
okay,
then we're going to be concerned. But look, there's no getting around the concept of history, and we are not believers of the idea it's different this time. You can make a lot of cases for why it could be, but we are at the highest levels of valuation in the last number of decades.
How important is the discussion around the Federal Reserve this year? Because there's a lot of questioning whether they even cut at all this year, and perhaps there's a rate hike some point of the year. So the Fed call seems a little less clear these days.
Which actually makes it less important,
okay,
Paul. So from our point of view, this is a do no harm type environment, and by do no harm, that means no hikes. And we actually do not believe that if you're Jay Powell and your term is up in 2026, the one thing you've got to do is deliver the soft landing to the country, and sticky inflation will not be Jay Powell's problem in 2025 or 26. It will be the administration's problem.
You can't see this on radio, but on YouTube, you can see a little birdie on my right shoulder whispering into my Sony headphone, Chairman Hyman. I mean, if Jerome goes down to be a governor, Paul, there's certain music to Chairman Hyman.
Wow, I hadn't heard
Could
that
you
one
see
before.
Ed Hyman running a Fed press conference? What would Ed Hyman Fed press conference be like? And don't ask a follow-up question.
Exactly. So, Julian, how long can bull markets last here? I mean, kind of give us a sense of where we are kind of in the history here.
It's relatively young,
okay,
by historical standards. The average bull market goes out 4+ years. And we're really only starting year 3 right now.
Right.
So from that perspective, and also in terms of the absolute gain, we're still really almost, basically mid-range.
But you had 23, 24, both of those years at S&P 500 give you more than 20% returns. How do you think about a year 3 in that scenario?
So actually,
three-peat. I mean, Coach Riley has the patent on three-peat, but can we three-peat in the S&P?
Coach Riley may not have the patent on three-peat if Andy Reid brings home a win on Sunday.
Well, he's going to get paid. He just struck a deal with the NFL.
There you go.
We got Fred. Thank you so much. He goes to breakfast between Chapel Hill and Duke. Like long? What is the distance? 11?
10 miles. Yeah,
10 miles or so.
15,501.
Waffle House is doing a surcharge on eggs at the Shea Waff in Durham, North Carolina, 27713.
Yep.
I mean, what does Ed Hyman say about this inflation fear out there? Or do we actually have a quiescent disinflationary vector?
Well, I can say this, having lived many years in Atlanta and environs, it brings a tear to my eye to think about paying an incremental cost at Waffle House.
It's Shea Waff.
Very, very good 3 a.m. visits.
Do you know I've never been in a Waffle House before midnight?
Yeah. Exactly. That's the way it works.
We used to play music down there, and there's the only thing that was open.
Yep.
But Cracker Barrel, the barrel to crack, shut down.
That shuts down. That's a family institution there.
But I mean, that's a pernicious inflation that people fear.
No question. And in all seriousness, let's step back and think about this, which is why the geopolitical dynamics are so interesting and sort of unpredictable at this point, is because President Trump was elected in large part because of the American consumers' disquiet with inflation. And this is inflation.
Okay, one more question. The hallmark of Ed Hyman's work is a respect for engineering and technology. Ed's carried that for decades and decades. Does your shop believe in the effervescence, the persistence of AI and Mag 7 and big tech? You gotta own it, right?
We do, no question about it. And again, that goes back to Ed's roots as an MIT grad. But from our perspective, what we've seen in the last couple of weeks with the evolution of DeepSeek is actually, if anything, going to accelerate adoption. And that's the key. Corporate America accelerating adoption of AI. We as consumers are already there, the same way we were the internet in the early 90s before it hit desktops in corporate America.
Chairman Hyman. Chairman, I can just see it. I mean, it just rings true. I mean, can we start a rumor here right now? Good morning, Mr. Powell. Thank you for. He uses his Bloomberg every day. I don't know if Ed wouldn't use. Ed would be at the Eccles building with a Sharpie in his hand, marking up PhD papers. Julian Emanuel, thank you so much. Working at Evercore ISI with the great Mr. Hyman. We'll get Ed Hyman in here for an extended conversation as well here as we can. Julian, you got to get up. I got to talk to Michael Barr about Moana 2. Okay, Julian, thank you so much. We welcome all of you on YouTube. What an experiment. Seriously, they brought it up yesterday 3 times within the Google soiree, and it's all new to me. I don't, the whole digital thing, like really? And the answer is, Lisa's people are watching this in their living rooms and their offices. And my sister emailed me. I haven't heard from my sister since Nixon was president. She says I owe her money. But my sister emailed me, and she's watching on YouTube yesterday. She lives in one of those yurt things out in the West. It's like an Indian, it's not like a teepee. It's like
that's okay.
It's good. No,
but she has the YouTube.
But she has YouTube, which is
but she does. Yep. But they're raising their prices, and people are paying it.
Yep.
That's the whole thing.
Yeah.
Disney raised the streaming prices.
That's the heart of the matter is the monetization. It's a $50 billion business.
Yeah, exactly right. It's just huge.
Are they popping like Apple services at 85% margin?
Yeah, absolutely. It's phenomenal.
I have YouTube Premium, folks. I pay for it myself. The company doesn't pay for it. I can just tell you it cleans it up. It makes it so much easier to use. With our news in New York City, he hasn't decided Eagles or Chiefs. Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Donald Trump said the U.S. should take control of the devastated Gaza Strip, shunt the area's residents to other countries.
We have an opportunity to do something that could be phenomenal. And I don't want to be cute. I don't want to be a wise guy, but the Riviera of the Middle East, this could be something that could be so bad. This could be so magnificent.
Trump's proposal was met with sharp opposition from Palestinian and Arab officials who rejected any displacement of Gazans from their homeland and warned of destabilizing the Middle East. Israeli politicians welcomed Trump's remarks, seeing them as an original way to resolve the Israeli-Palestinian conflict. Israeli Prime Minister Benjamin Netanyahu.
You see things others refuse to see. You say things others refuse to say. And after the jaws drop, people scratch their heads and they say, he's right.
Netanyahu made his comments while visiting the White House. The CIA has offered staff buyouts to shrink the workforce in line with the Trump administration's broader job cuts across government. As part of the offers sent to the workforce, employees could receive pay and benefits through September 30th without having to work. Helicopters, drones, and armed officers in tactical gear. Those are just some of the things that will be visible throughout the city of New Orleans leading up to this Sunday's Super Bowl. Special agent in charge for the U.S. Department of Homeland Security Investigations for New Orleans, Eric DeLon.
We want to make sure people are safe and secure here. We want to make sure that all of our assets are executing according to that plan.
DeLon's comments come as the city is still recovering from the deadly New Year's Day terror attack in the French Quarter. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Ethan Bronner in 1 hour from Tel Aviv. We're thrilled to have him. He is absolutely definitive, and we should have a 1 hour conversation. We can't do it justice. Okay, we got the story. I know, Michael Barr, the news flow is extraordinary. But there's this racket where China exports to us and puts everything in little boxes to save on tariffs or fees or something. And the U.S. Post Office, I assume because of President Trump, is saying no more little boxes from China?
President Trump got rid of, there was a rule where if it was $800 or less, you didn't have to pay duty. And then the president said, okay, I'm going to get rid of that. And then that's when the halt of the mail stopped. We got a surveillance Timu correspondent, Lisa Mateo, here.
Yes.
On this, I've noticed this, Lisa, recently more little boxes are coming in.
Yes, and it's Timu, but it's also Shein, that other one that the kids love because the clothing is cheap.
It's like the afterthought.
Yes.
She gets lots of little boxes, and I didn't know why.
It's the little boxes, and it's cheap, and it's really cheap things. And that's why the kids love it, and that's why I always have the little boxes, too, on my doorstep.
Do you open them now and really upset the children, where you get the scissors out and open them up before they get to them just to aggravate them?
No, definitely not. She takes care of all that. She opens everybody's. That's her joy of the day, is to open the packages.
It's to open the boxes.
Yes.
Mine's to break them down for recycling.
Oh, really?
That's a
That's
joy,
on the
I'm
recycle
sure.
bag.
You're
Yep.
thrilled about that one.
Yeah, you can't throw the big boxes in the recycling. You got to break them down.
Oh, yeah. No, it's like Christmas every day.
Yep.
It is. She loves it.
I used to do. I'm very fortunate that I don't have to do that. You have to sit there and break down every box.
yes.
I like doing it. It's kind of,
See, you
You
need to
can
move.
come to my house.
Yes,
You need to move to the Poconos because we just have a little pit and we just burn the
it.
boxes.
Yes.
You live in the Poconos?
Yeah, oh yeah.
Eastern Ohio.
Was there a bar in the backyard?
Yeah, there's been a lot of bar in the
There's
backyard.
a lot of bar. Michael Barr, thank you so much. Red on the screen here, futures negative 27, but the VIX doesn't move all that much, 17.48. At some point, we'll dissect Google and their important announcements yesterday. We're out on YouTube. Subscribe to Bloomberg Podcasts. We're all digital. I think I need makeup. That's how good it's going. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Will the year-over-year charge of U.S. PPI exceed 3% in February 2025? At IBKR Forecast Trader, the yes, recently at 39%. What's your take? Trade your prediction at ibkr.com/forecast. All right, well, tech stocks continuing concerns over a trade war. Well, that's pushing the markets lower this morning. We have NASDAQ futures down 0.8%, 180 points. Dow futures down 0.1%, 49. S&P futures down 0.4%, or 28 points. The two-year yield 4.19%, down 2 basis points. The yield on the 10-year 4.47%, and that's down 4 basis points. To commodities, gold rose to a record $2,892 an ounce for COMEX gold. We head over to oil. Brent crude down about 1%, $75 a barrel. WTI crude $71 a barrel, and the Bloomberg Dollar Spot Index down about 0.2%. Back to earnings we go. Uber, a steady booking growth, but it also reported weaker than expected fourth quarter earnings, and that has shares lower, down about 6%. And then from cars to motorcycles, Harley Davidson off more than 2%. A hog, yeah, revenue for the fourth quarter, it missed estimates. And then Snap, the owner of Snapchat that the kids love, down 0.1%.
Snap-on tools.
Snap. Fourth quarter results beat, but it gave a mixed forecast, so that's why those shares are lower. After the close, we have more Qualcomm, MicroStrategy, Ford, and Allstate. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks. Just killing it on the earnings. I saw a photograph from a fan at Costco looking at the empty egg section. Did you go yesterday? Did you darken the door?
I did not. I went to the local Acme. I couldn't watch my
Were
budget.
there eggs at the local Acme?
It was there were, but it was limited.
Yeah.
And there were signs
We're
everywhere.
lots of out of stock,
Yeah.
is what I'm saying.
Yes, correct.
Thank you for that. It's a surveillance egg correspondent, Lisa Mateo. This is a joy, and I want to explain why. If you go to the Wikipedia of W.R. Hambrecht, or Hambrecht and Quist, which was a spectacular San Francisco experiment decades ago, there is an image of the Apple Computer Inc. IPO. Paul Sweeney and I lived this along with Marvin Lowe. He's now macro strategist with State Street. But I think more than anyone we talk to in macro strategy, he has a technology fiber working with W.R. Hambrecht, Oppenheimer of a different Oppenheimer of years ago. Marvin Lowe, what is your take on the durability of Mag 7 versus the ephemeral profits of 2000, 2001?
You know what? I mean, I think they've proven themselves time and time again. The world is still transforming. The role of technology does not become any less as we think going forward. There are always winners and losers in these spaces, but kind of having said that, these companies have proven that they know how to navigate.
Paul, I used to go out to Stanford every year in March for the Economic Policy Institute. John Chauvin was so kind to me. That pixie dust that Marvin lived years ago, to me, it's still there. It's different.
Yeah.
But it's still there.
It's still there. And technology, Marvin, that kind of brings us to the question of, we're kind of parsing through the Google numbers from last night. We're going to get some more technology numbers coming up. And of course, it finishes up with NVIDIA. But how do you think about this AI as a transformative part of technology? Like, we'll have Gene Munster from Loop Capital. We'll talk about it's almost like electricity. It's almost like the internet. That's how big it can be.
Yeah.
Do you guys think about it the same way?
You know what? I absolutely think that we are not even in the first inning when it comes to how AI is going to transform society. And I think that society needs AI to be part of it. When we look at the workforce, when we look at how hard it is to get simple tasks done, this is part of that solution. So whether or not we have different players that drive it, it's here to stay.
Okay, Rashford was loaned, not traded, Paul. Marcus Rashford was loaned. He went up north. Where I don't understand. I'm talking to Chris Collins yesterday at Bloomberg. I only understand about every third word because he grew up in Birmingham. Chris is spearheading our Bloomberg AI project.
Oh, nice.
So you go to Alphabet shares drop, and they have a summary of 3 bullet points of the article by Davey Elba and Julia Love. That's the first inning Marvin Lowe's talking about.
I think so.
They're in English, unlike Chris Collins. I can't understand a word he says.
So if AI is part of our future going forward, how about tariffs? Are they something we just have to deal with for a certain period of time here?
Yeah, I mean, clearly it's the bat that the administration wants to wield. I don't think that I've seen anything that makes me believe they're not going to wield it whenever they can. So, it's with us for a while.
What does global GDP look like? If you sum it up, we used to have a simple guideline in a simpler time that 3% global GDP was a recession. Are we there?
If tariffs evolve in the worst case, and the retaliatory aspects of them evolve in the worst place, yes, we are there. We're probably under 2% in that type of world.
Can you own equities, even exceptional American equities, given 3% or sub 3% global GDP?
You know what? If we're looking at these valuations and you believe that worst case, it's hard to make a case that you want to own a lot of risk. You probably want to be quite defensive. Kind of having said that, the market is certainly trading as if there are off-ramps, and this administration continues to give you signs that they're looking for an off-ramp, but it's a long game that they're playing.
So as a global macro strategist at State Street, where do you think globally, U.S. versus non-U.S., where are you guys right now?
You know what? I still think U.S. exceptionalism is something that is clear based on the data. We've never seen expectations around U.S. growth as wide relative to the rest of the world in decades. So that kind of really shows you where you are in that story. And based on the way the U.S. economy is set up, tariffs are going to hurt the rest of the world more than it's going to hurt us.
Let me posit a question and make the observation. Are interest rates normal now, or is normal a lower set of yields?
No, I think interest rates are certainly starting to approach normal now. And if anything, I think that there's risks that they could be higher in this world where inflation and the labor market and this uncertainty is part of the next cycle.
Okay. Do you want to? I'll ask.
Go.
So a Fed rate hike? You're kidding.
No. Fed's not going to hike. It's really a function of whether or not inflation stabilizes in here, and the market's already pricing inflation at these levels going forward.
Yeah, I mean, Paul, I got 2.04% on the 10-year real yield. That's a surprise on a Wednesday morning.
It is. Marvin, what do we do in fixed income, as Tom mentions the real yield? Do we sit there with the 2-year Treasury at 4.25%, or do we take some credit risk out there?
You know what? I like credit risk out here.
Okay.
You know, I don't like spreads, but I do like the income component if we're not really looking at hikes in this world and we're somewhat stable.
And the best performing sector is, once again, U.S. corporate high yield this year. Yeah. I'm surprised, given there are concerns about maybe the economy a little bit or rates. So do you take that much risk and go to the leveraged loan market or the high yield market?
I would say that you do.
Okay.
I would say that you do. I kind of like that 7% that you collected really guards you against some of the volatility that we're seeing elsewhere. And the economy seems like it's on fairly solid footing.
Some of our contestants who come into the studio get the surveillance question of the day. Have you seen Moana 2?
I am going to say I have not.
You have not. So we're like completely out of the
not
loop.
representative.
We are not representative of the known world. Marvin Lowe, thank you so much with State Street Macro Strategy, particularly remembrances of the technology. Remember Robinson and Stevens?
Robbie Stevens, yep, you bet.
Did you go out there? Did you visit Hambrecht and Quist?
Sure.
And Robin?
Yeah.
Thomas Weisel?
Yeah, Thomas Weisel. Those guys broke off from Robbie Stevens.
They did.
Tom Weisel.
And it was an IPO. I sat at my desk, and behind me was a credenza overflowing with IPOs.
Sure.
Overflow.
Late 90s, mid-90s.
Hundreds and hundreds of them. And my job was to speed read them to get a feeling for, the first thing I do is go to see how the preferred disaster, who was getting preferred in the deal.
Right, exactly. So, but it's different today. The companies are much more profitable.
They're all going to private equity. Nothing's getting to IPO, right?
No, exactly right. They can all just go out to Sand Hill Road and get all their money they need.
Exactly.
Yep.
Is that good?
I think it's good for them. Why deal with the pesky public shareholders and Wall Street analysts and things like that?
And the forgettable lunches?
Yeah, exactly.
I don't think I ever had a good roadshow lunch.
The Four Seasons in New York, they were good. They were good. And I'd go back to back to back there. So back in the day, you go one conference room to another.
You go to 3 at 12 noon.
Yep. Those were the days.
Stay there and fake that you're eating the food, and you get some merch.
Yep.
Remember the plastic thingies, the tombstones?
Sure. The Lucite. I got about 100 of them in my.
You have them out on the deck.
Right yeah.
Surrounding the Vespa.
I kept them. I'm never.
You kept your Lucites.
Yep.
I did not keep my Lucites. Yep. Marvin Lowe, thank you so much with State. You can't say. Alex emails in, getting ready for 10 a.m. This is definitive. Alex Steele. Moana 2 was not as good as Moana 1. The definitive from Alex Steele. We're on YouTube. Subscribe to Bloomberg Podcast. It's growing each and every day. Lisa Mateo on YouTube. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Disappointing results from Alphabet, AMD, kind of sparking some concern about the outlook for mega cap tech companies. Right now, Alphabet down 7%, AMD off about 9%. Sticking with tech, Apple shares down 2%. Sources say China considering an investigation of Apple's policies and the fees that it charges their app developers. We go to NASDAQ futures down 0.8%, Dow futures down 0.1%, S&P futures down 0.4%. The 2-year yield at 1.19%. That's down 2 basis points. The yield on the 10-year, 4.46%. That's down 4 basis points. And the Bloomberg Dollar Spot Index down about 0.2%. Want to get to companies making news in the auto industry? Nikkei reporting Nissan pulling out of its deal with Honda to combine the companies and regain that global edge. You have Nissan down about 4% in Tokyo, Honda up 8% in Tokyo. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Got lots going on here. We're trying to corral Rob Carolyn to talk about a snowstorm on the east coast of the United States called an I-95 effort. We've got Tom Barkin of Richmond in conversation with Michael McKee and Company. We're going to get to that in a moment. But first, and frankly, Tom Barkin would want to listen to this. Dara Meyer joins us from Queen Victoria Street, head of America's Research HSBC. Dara, rule one for Jerome Powell listening and Tom Barkin listening. Is the dollar strong or are the other currencies weak?
Oh, I think for the most part it is about the dollar being strong. It's just given that amplification most of the time by the fact that some of these other currencies are struggling with their own local issues. You know, euro and sterling, I guess, right, standing out in that regard, right? But it is, I mean, this is a U.S. exceptionalism story, Tom. I mean, that's at the heart of what we're seeing, really.
On DXY, the traditional BBDXY is much better math. But let's go to the traditional index, DXY, 106, 107, out to a 109. We touch 110 for a cup of Sanka. Fine, but Dara, the thing that I note here is it's nonlinear. At what level of dollar strength does it really kick in and upset the system?
Well, look, I think there's some obvious pain points. I guess the one that we've been most fixated on as a market is euro-dollar. Does it move below parity? I mean, our view is, yes, it does. We've got the Walmart trade in our forecast, 99 cents. And I think that is one pain pinch point. A lot of the time I hear that this market is very, if you like, overly positioned already long in dollar. And maybe some of the price action we've seen the last few days might validate that prior observation. But, you know, I'm not really sure everyone is massively invested in the dollar long story. There's still some reluctance, still some nervousness. So I think it's got some legs, particularly from these levels. But I think once you go another 5% or so, then again, you begin to say, well, hold on, is there a lot in the price of this dollar? But I think we have that 5% of buffer still to move.
But in the Pacific Rim here, the Japanese yen, Dara, how do we think about that? We have a little bit of strength in the yen here today, but it's been pretty weak. I'm not sure what the Bank of Japan really wants to do here.
Yeah, look, the overarching story on dollar yen has been it's driven 95% by US 10-year Treasury yields, right? But what we have begun seeing in the last few weeks and months is a bit more of a Japanese flavor coming in, if you like. We had, well, the July surprise rate hike by the BOJ last year. We've just had another one, obviously recently. And overnight, we get wages data, Japanese wages data, much stronger than expected. And it's nice that, right? Because it reminds us that the Japanese yen, there is a local story here. And it's one of, you know, how quickly might the BOJ follow up their latest rate hike with another one. I think that the challenge, though, is when you're forecasting is you still end up coming back to dollar yen. It still kind of feels like it's 95%, maybe now 90%, all about what the 10-year Treasury is doing. I'm not sure that model has changed.
Just in terms of, I mean, I think all investors or most investors are trying to get a handle on what a world of trade tariffs means for respective financial markets. How do you think about it in the currency markets? Is it just another reason to be long dollar?
Well, it depends what headline you're reacting to, right? Because that's it. And we've seen, okay, what I would say is we've seen a choppy market over the last week, okay, fine. But we've actually seen a pretty logical currency market over the last week. So when we've got headlines saying, the US is going to impose tariffs, dollar rallies as the tariff implementer, and the other currencies weaken as the ones on the other end of that tariff. That's all logical. And of course, when you get a headline saying, we've kicked that can down the road. We're getting very logical reversals in those moves. So I think if you like, the framework is straightforward. If the US imposes tariffs, I think the dollar will strengthen. I think if they retrace from that or retreat from that, the dollar weakens, right? But I think what you have to do is look beyond the noise of tariffs and say, well, hold on, underneath all of that, what have we got? And to Tom's first question, what you've got is an exceptional story on the US dollar of resilient economy. And we've covered this ground before. The tariff could be the extra juice if they are imposed that gives you a little bit more of a turbocharged US dollar.
So as we think about, I wanted to talk to you about the pound sterling here. Is that a different story vis-a-vis the dollar than the euro? How do we differentiate the two?
That's a brilliant question. I mean, this is a really important question.
And brilliant and tricky, right? Which is the worst kind of one to face. No, this is a challenge. I mean, a lot of the time, honestly, euro and sterling have struggled to kind of differentiate themselves, set themselves apart. I guess the latest narrative is the euro's more vulnerable to a tariff onslaught than the UK, which, as we all know, runs a modest trade surplus. The US runs a trade surplus with the UK. I'm not sure that both those currencies can escape, if you like, the big dollar story, that US exceptionalism theme. So I think both of those face that, if you like, challenge. I think, though, beyond that, they face different challenges. If we think about Europe and, to tariffs again, but UK still faces question marks over activity, what that means for the fiscal situation in the UK. Will the Bank of England tomorrow come out with a much more dovish forecast on, let's say, UK economic activity that pressures sterling? I think we see cable heading towards 123, 122 potentially. I don't think that's too ambitious, obviously at the current levels. Right. But I still think there are downside risks to that. But different stories, even if they're heading in the same direction.
On tariff and loony, Audrey Child-Friedman, I fell off my chair. She's going, don't go loony, don't go dollar Canada. She's looking at Canada, Japanese yen. Do you have some twisted Daramara tariff opportunity Michael Barr needs to know about?
That's not so twisted. I mean, I guess what you're getting there is if you're playing a big tariff story being imposed on Canada, I do think you get a big move in dollar Canada, right? So, we recently changed our forecast, assuming a 25% tariff to 160 on dollar CAD. So that's like a 10% move is what we're penciling in. Now, why would you do it against the Japanese yen? Well, I guess you're layering in some risk aversion being part of that whole tariff story. So, we've seen when there's been acute risk aversion, dollar yen goes lower, right? So you get a stronger yen against the US dollar that's already gone up against a weak Canadian dollar. So it would be, if you're right about the risk aversion element, it kind of turbocharges that Canadian dollar view.
Dar, thank you so much. Dara Meyer with us with HSBC out of London. For those of you not in the know, and good morning to 92.9 FM from Mount Katahdin down to Black Island, there is a 70-second bean pot.
Oh, yeah.
And the bean pot is 4 schools playing, the excitement of playing at Boston Garden, whatever it's called now. And Harvard's a little bit off their game. The BU took them out 7-1. The finals are going to be BCBU, which is like really traditional, that makes sense. Northeastern was deposed. They've been very good in the recent years. But the hat trick at Harvard is Thomas Barkin, BS Economics, MBA Harvard, JD Harvard.
JD MBA.
How many people do that? This is the smartest guy in the block at the Richmond Fed. I can't say enough about the well-rounded acuity of the gentleman from McKinsey Atlanta. He's the real deal, and he was selected to take over at the Federal Reserve Bank of Richmond. In conversation with John Farrow, Michael McKee, and Lisa Abramowitz. This is going to be really interesting. And he's got a real, Paul, business sense. What's different? He's got the economics degree, but this is a holistic business sense.
And I'll give you a little sense of the Fed Reserve Building in Richmond is East Bird Street, right along the James River, a beautiful location for the office building. I used to work right down there as well. Right now, Michael McKee and Company with Barkin of Richmond.
You include possible tariff changes in your outlook. So let's start there, did you?
Well, so you're talking about forecasts we did in December.
Yeah.
That seems like a long time ago now, doesn't it?
A lifetime ago.
Yeah, no. So I think right now, if you look forward, you have to say tariffs are coming, are here, are going to be here. it's just incredibly hard to know exactly what it's going to be. So I think the concept of tariffs, sure, but the reality of what specific tariffs on what specific countries at what specific percent on what specific goods, we don't know.
The market seems to believe that on the margins, this just means the Fed is going to take its time, that you're going to take your time and assess all the data, including all the tariff announcements, and that you're not going to be in any rush and potentially may not cut it all this year. Do you agree that on the margins, the tariffs and the potential ramifications, the uncertainty would delay you from cutting rates?
Well, what I'm hearing from everyone I talk to is just elevated policy uncertainty. And you mentioned tariffs, but deregulation, where is it going to hit? Where's the tax plan going to come out? What's going to happen to net migration, energy policy, geopolitics? I think there's just a lot of uncertainty in the air, and it's very hard to know what's happening with growth and employment, what's happening with inflation, until you get a little more clarity on all of these uncertainties.
So what are companies telling you they're going to do now? Is everybody just sitting on their hands? What does this imply, the uncertainty imply for the economy?
So I think it's really interesting to look at these optimism indices. And if you go back to November and December, the Richmond Fed and the Atlanta Fed and Duke do a survey of CFOs. What you saw was total optimism on the economy went up significantly. New administration, climate for business, whatever. Optimism about your own company pretty much flatlined. And I think that's because people are dealing with this uncertainty. We think this will be good, but I don't know how it's going to play out in my business. Small business uncertainty had the biggest jump in, optimism had the biggest jump in its 40-year history, and then went up again last month. And I think small businesses are saying climate for business. Now, they do more of the hiring. The big businesses do more of the big investments. And so I think it's possible we may see another year like 2019, where consumers are spending and people are hiring, but investment sentiment is still a question mark. And that's what I'm looking to see.
Well, what's your kind of baseline for how you're going to judge the economy, given all of the uncertainty? You go into March 19th and you have to make a decision one way or the other. The default, I guess, would be to do nothing. But where do you think the economy is going to end up over the next 6 months while this cloud is over us?
Well, the case for wait and see is, in fact, that you want to wait and see. I mean, I start with a baseline economy the data's been pretty favorable. I mean, we had a pretty good growth in the fourth quarter. Consumer spending's healthy. Inflation, especially the last 2 months, has come down, and I expect the 12-month numbers to come down nicely over the next couple months as we lap last year's elevated first quarter numbers. Job market seems to have stabilized. So I start with a baseline that's pretty favorable for what we're trying to do. And then you have uncertainty, and it could take us up, it could take us down. We'll just have to see.
Do you still see the Fed cutting at some point this year?
I mean, that's certainly the lean, but we'll see what happens.
Could the Fed potentially see anything that could cause you to contemplate hiking rates?
Well, I never take anything off the table. And so if you never take anything off the table, you can't take anything off the table. So I'm not going to do that. But you'd have to see an economy overheating. And I don't see any signs of an economy overheating. I see inflation coming down, not going up. I see the job stabilizing, but we got the JOLTS data yesterday. It seemed to come down a little bit. It doesn't feel like we're overheating. And I think you'd have to imagine you're seeing an economy overheating.
Let me go back to the base case idea. At this point, do you think that interest rates are suitable for this economy? For a while, the Fed was saying we need to cut because we're still tight. But if you can't, is that okay? Are you looking for data that will tell you to cut? Or are you looking for data that will tell you to hold?
Well, so I supported the recalibration we did, obviously, in the fall. And that's because with inflation in the twos and unemployment weakening at the time, the one number that seemed out of range was having the Fed funds rate at 5.3. So we've brought it down 100 basis points. It's at 4.3. I still think that's moderately restrictive. But we'll learn as we go. And if what happens is the economy comes back strong, you have to ask yourself questions about how restrictive you really are. If the economy weakens further, you can adjust appropriately. If inflation continues to come down, you could say, yep, I'm having the impact I want to have. If it doesn't, you ask yourself those questions. And so I think we've recalibrated to a place that is more sensible given where the economy sits right now. And I think it leaves us well positioned on whatever happens.
But to go back to a very old Fed term, what would your bias be? Towards cutting?
My bias is to see what happens and then react appropriately. As I said, I think if you look at the last SEP, there's a lean in there, toward cutting. But let's see what happens.
That suggests you might be equally as open to hiking. Is that the case?
That's another good way to ask the exact same question. So I'm going to go, I think the lean is toward, okay, but let's see what happens.
So you would be open to doing so?
As I said earlier,
I understand you don't want to make that headline this morning,
thing.
but I just want to understand how open-minded you are on these issues.
I'm always open-minded on what happens with the data. If you see an economy that overheats, you have to respond to it. I don't see an economy yet close to overheating.
There was some questions about whether we are accommodative right now or restrictive. Can I just finish that? The Federal Reserve Chair, Jay Powell, I'm sure you watched the news conference, said that you were restrictive, then said financial conditions were accommodative. Can you square that circle at all?
Well, so I do think we're somewhat restrictive. I don't think we're hugely restrictive. We're a lot less restrictive, obviously, than we were, 6 months ago. But we'll see as we go. And like I said, if inflation continues to come down, that would be a positive sign. If the economy continues to perform at a decent but not overheated level, that's a sign. But if you start seeing an economy, heat up, then you'd have to ask yourself those questions.
President Barkin, appreciate your time. As always, sir, thank you.
Good to be here.
The Federal Reserve Bank of...
John Farrow there with Michael McKee, Lisa Abramowitz, with the wonderful Tom Barkin of Richmond. Again, I just can't say enough about his holistic view more than anyone at the Fed right now. He has just an eclectic academics and experience in really what this is about, which is not a parlor game, Paul, on interest rates. It's about the idea of how's business, how do we move forward to employ Americans. It's somewhat of a measured inflation.
Right, and he was
how quaint.
Exactly, and he was pointing out that while some of the large corporations, can make the big investments, and we're all talking about AI now and those types of investments, it's the smaller companies, Tom, that do most of the hiring, and so it's important for him and his bank, keep in close touch with what some of the small mid-sized companies are doing out there.
Go Spiders.
Yeah.
He's from Richmond.
Yeah,
and the
absolutely.
answer is, you mentioned the Fed building in Richmond. I had the honor of sitting there with various worthies, and they're explaining to me, and you can see the remains of the bridge where the Confederacy escaped to the south.
Yeah.
Is the Union entered. I mean, it's steeped.
Yep, they went down to Petersburg in Petersburg, Virginia. That area is a steeped in Civil War history across the city, across the state, the Commonwealth of Virginia there. So
yeah, but it's also part of our business pulse that gets you out to this shock growth that we've seen.
Yeah, absolutely. So, I think what I heard from the Fed president there is that open-minded, is kind of, as John Farrow pressed him on, kind of where he thought rates might go next. And again, data dependent. We've heard that time and time again from this Fed, and Mr. Barkin seemed to suggest the same thing here, that they will go where the data takes them. A lot of folks, Tom, know that will seem to say, okay, that's fine, but the data you're looking at is really, kind of lagging data. You should really be looking at some of the more timely, real-time data. So, for example, rents and rents equivalent are already down well below where the Fed feels they kind of are in the data they look at, which would suggest you need to be cutting now.
Yeah, well, you got to get out front. But what I think is so important here is the zeitgeist doesn't capture what Jason Furman at Harvard's picking up, which is near 2%. Like, we're there.
Yeah.
No one feels that way.
No.
Not when I look at eggs.
No, absolutely, because the absolute prices for so many goods and services have not come down.
We go to our eggs correspondent, Lisa Mateo, here for a quick 20 seconds. Are you charging a quarter at the Mateo breakfast table?
That's a fantastic idea.
How many eggs does Hormone have?
He puts about maybe 8 down for one serving.
Oh,
8? That's not good, is it?
I don't know.
8 eggs at one serving?
He's a young guy.
That's the price of a
growing boy.
That's the price of a six-pack of Budweiser.
That is. Yeah, sure.
8 eggs?
Can't do that.
I bought an 18 carton yesterday. It cost me about $9.
Gone.
Halfway. Yeah.
We'll see. Disney's out. They pull back a little bit, but you look at we played Belinda Carlisle yesterday. You got to play some Disney. What do you start with? You start with Dick Van Dyke.
Oh.
For Dick Van Dyke and all he added to Disney over the years. Good morning.
For example?
Yes?
One night I said it to me girl, and now me girl's me wife. Oh, And a lovely thing she is, too. She's
supercalifragilisticexpialidocious. 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 Supercalifragilisticexpialidocious.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
The president is focused on geopolitics.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. We welcome all of you to a Wednesday. The news flow, absolutely extraordinary. Do we have Rob Carolyn at some point sighted? Do we have a Rob Carolyn weather sighting? We're going to try to get to a winter storm coming across the east coast of America. We'll get to that as we can. We're going to go to Tel Aviv here in a bit. Ethan Bronner tuned up right now. We'll have him on in a moment on the news of President Trump, Mr. Netanyahu, and Gaza. We'll get to that here in a moment. Nathan Sheets will be along with a wonderful holistic leadership at Citigroup as well. Red and green industry. What do you see, Paul? What do you see this morning?
Yeah, I see, a little market pulling back a little bit. The S&P's off about 0.4%. The Nasdaq's off a little bit here as well. But guess what, Tom? Gold higher yet again.
Thank you. I missed that.
We're close to $2,900 per ounce. So that continues to march higher. How about that?
3,000 gold?
Yep. I mean, it's just, fantastic. I mean, and even I'll call that your Bitcoin, Tom. It's up 1.5%. We're $98,000
Excuse me,
back.
my Bitcoin.
Your Bitcoin, exactly. So we got a risk-on view for some of those assets.
Do you know I had an offspring that actually wasted a martini in Doge?
Oh, okay.
Like bought and lost money on
the Doge.
The Doge.
Okay.
There's another Doge. That's part of our Washington story as well. Let's get right to it with red on the screen. Futures negative 26. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
Yeah, and we've got futures falling. Tech stocks disappoint. We have shares of Google parent Alphabet down 7%. Revenue miss. Growth in its cloud business slowed. And then you have Advanced Micro Devices shares down 9%. Fourth quarter revenue topped estimates. But here's the thing, its data center division's revenue was below what was expected, and that's why those shares are lower. So we go to NASDAQ futures down 0.7%, 170 points. Dow futures down 0.1%. S&P futures down 0.4%. We have the 2-year yield at 4.19%, down 2 basis points. The yield on the 10-year 4.46%, down 5 basis points. Now with tariff talk on the mind of investors, we want to hit currencies. Bloomberg dollar spot index down 0.2%, with the Mexican peso down about 0.5%. Canadian dollar up 0.2%. And we also have the Chinese yuan. That is little change. To earnings we go. Have to talk Disney. Yeah, topped estimates. 1 to 2. Higher income because of those higher price streaming services. Profit from the TV networks fell. And the theme park earnings, that was little change. Its shares are up about 1%. And Uber, steady booking growth. But it also reported weaker than expected fourth quarter earnings. And that has shares lower, down about 4%. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Joining us now from Citigroup Research, Nathan Sheets, driving all of their coverage internationally. Nathan, as you go into the weekend and need to write up the firestorm of news and emotion, what's the number one lead for you at Citigroup as you publish this weekend?
I think that the big issue that we're focused on, the markets are focused on, the business community is focused on, is where are these tariffs headed? And I think it's encouraging that we got these 30-day reprieves for Canada and Mexico, but it hardly answers the question of what will these tariffs look like in a year or two, and then what are the spillovers from these tariffs into macroeconomic performance. And this is just something we haven't seen literally for decades. You might say, well, he had tariffs during his first term. It feels like he really means it this time.
So what does the economics show you? I mean, I think the thing I've heard probably most frequently, and we've heard most frequently, is that if nothing else, tariffs are inflationary. Maybe the change in immigration policy, it will be inflationary. Are those valid concerns? Are they material concerns?
When we look at the traditional economics, I think that we conclude that tariffs are a lose-lose proposition. And that's largely why policymakers have stepped back from them over the years. And indeed, in the United States, if we put tariffs on, that's likely to mean higher prices and increased price pressures in the United States, reduced real incomes, lower real GDP growth, and it also lowers real GDP growth abroad. But I'm kind of trying to stretch my mind, and is there some other paradigm where, this might make sense? And one place where it may is if, this is more threat than actual reality. But I don't have any confidence of that at this stage.
Nathan, with all your work at the IMF and such, I think what's so important here is the separation of goods, exports and imports from services, exports and imports. Within the debate, I see services ignored. Do tariffs affect American services and our use of other nations' services?
Absolutely brilliant point, critical point, Tom, that over the last, let's say, 15 years, a lot of the growth of trade that we have seen has been more in services than goods. And the reality is that it is harder to put tariffs on services than it is on goods. So when I think about where these tariffs are going to land, I assume primarily it's going to be on goods. But it wouldn't surprise me if in the years ahead, the Trump administration explores ways that it can increase its capacity to put tariffs on services. One final point is that the U.S. is the services superpower. And so when you start thinking about tariffing services, you may be opening a door that other countries can use even more effectively and more powerfully than the U.S. And that may give the administration incentive to stay more focused on goods. But I think that that's a set of questions that has not been fully explored or litigated yet.
So, Nathan, given that backdrop, how has the city economic outlook changed, if at all, since the election?
To tell you the truth, when I see the full vector of policies that the Trump administration is proposing, tariffs on the fiscal and the tax cuts, the deregulation, the immigration policies, I see just a whole variety of favorable and challenging, difficult supply shocks and demand shocks. And what I've done is, to a first order, I continue to think maybe they net out, at least for the U.S. outlook. And my forecast on that is little change. But the confidence bands are much, much, much wider than they would be otherwise.
Nathan, I have to keep it short due to breaking news. Far too short a visit. Let's do it again soon. Dr. Sheets is with Citigroup with great research. I wanted to talk to him, folks, about, of all things, the wealth of Australia, which Citigroup has just written on, but we're not going to do that today. We now turn to Tel Aviv, where the qualities of Ethan Bronner driving all of our coverage within the Levant. Ethan, I'm not going to mince words here. When you were at Wesleyan, you were sheltered from the violence of bombing. We didn't have social media. We didn't have the immediacy of the imagery we've seen in Gaza. I was the same way, of a vintage older. Now we have the immediacy where I can't even look at coverage of Gaza. It's so violent. How did you respond, given the last 2 years of Gaza leveling, to the president's comments yesterday at the White House?
It's a great question, Tom, but I'm not going to make it personal. I think that what I can reflect is how the world responded, and certainly nothing less than shock. I would say that in Israel, there was a kind of bewildered and amazed and bemused embrace, because anything that might push Hamas and Palestinians who oppose Israel away from its border to be replaced by Americans and American soldiers and businesses, wow, that is something the Israelis are happy about. Pretty much everybody else is horrified.
There was a 1948 Palestine war among, any other sets of violences from Beirut on down, say, to Cairo. Mr. Trump meeting with the leadership of Egypt here in the coming weeks, and with Jordan, I should mention, as well.
Right,
Ethan, this is so important. Where did 2.142 million Palestinians go?
So, I mean, the president says they're going to go to Jordan and to Egypt and perhaps another half dozen other places. If we look at Jordan, a country which is more than half Palestinian to begin with, and that is also playing host to 1 million refugees from Iraq and Syria, and which has its own internal political challenges from the Muslim Brotherhood, this Hashemite monarchy is very, very afraid. And the last thing it wants is hundreds of thousands of Palestinians with links to Hamas coming into its borders. Egypt, the same. I mean, tens and tens of millions of people in Egypt. The Sisi government is fighting against the Muslim Brotherhood, of which Hamas is an offshoot. And they're fighting ISIS in the Sinai. The last thing they want is hundreds of thousands of poor, homeless Palestinians coming into there. So I don't know.
Ethan, has there been a response from Iran yet?
I believe so, Paul. I believe that Iran has said this is nuts, and it's a sign of what's wrong with America. I believe I did see something from the Iranian foreign minister, yes.
So is there any sense within Israel as to a possible next step here? I'm not even sure where we go from this pronouncement from the president yesterday.
It's very, very difficult for me to answer that. First of all, the decision-making apparatus is in Washington right now, and they're just waking up. So I don't know the answer to it. But I mean, generally in this country, it's like, whoa, no Israeli would have ever even dared propose this to President Trump, that the United States come in, bring its troops and its people into Gaza to protect Israel. And he has made the suggestion. So they don't know what to do. I can tell you that the officials that I'm talking to who are in touch with those in Washington are saying, we've never had a more amazing meeting in the White House in the history of Israel.
Right. This hasn't come up yet. And Ethan, you're so good at this, I can take the luxury of bringing it up with you. I look at, say, Robert Kaplan in my book of the year 2 years ago, his wonderful stretch from Morocco over to the east, getting to Persia, etc., and The Loom of Time. And Ethan Bronner, central tendency there is Turkey, Erdogan looking down from the north, trying to husband control over this region. How does Mr. Erdogan respond to ad hoc Trumpisms?
Well, I don't know how he's going to, but you're absolutely right that it is a great opportunity for him to show a sort of Muslim solidarity and to show that this Zionist American imperialist approach is absolutely the last thing we in the region want and need. And it's going to help him take over Syria if that's on his agenda, which it appears to be. So it's a very legitimate question.
Paul's got some more. Let me sneak one in here quickly here. Is Netanyahu electable in Israel? Like if there was an election right now, would Netanyahu win going away?
So, Netanyahu is the Trump of Israel, meaning who could have possibly imagined such political power? And the answer, in my view, is yes. And the meeting yesterday and what President Trump offered him is only going to consolidate his political standing in this country. Yes, I believe he is.
Ethan, can you give us a sense of what the situation is on the ground in Gaza today? Where are they in that ceasefire process?
Well, we're 2 weeks into it. They're supposedly starting a discussion about the next phase. But of course, what the president just said kind of throws everything into the air. Meanwhile, on the ground, hundreds of thousands of people are returning to nothing, to their homes that are, hanging rebar and no water, no sewage, and they don't know what to do. Many of them are going back to the humanitarian area. Many of them are saying, get me out of here. So, that is one thing that needs to be said here, that ideologically, Palestinians ought to be moved, but personally and practically, plenty of them would go if there were a place to go, because their homes are unfortunately a construction zone.
Ethan, one final question. We brought up, and this is in March of last year, it's like literally 12 months ago, the successful civil engineering project known as the Gaza Floating Pier. How do we actually, where do we put the concrete of a destroyed Gaza, forgetting about the humanitarian issue? I mean, we couldn't even build a dock off Gaza, let alone get rid of a 2 million people body of concrete.
Tom, I'm going to take that as a rhetorical question because I'm not an engineer. I hear you. The floating pier was a disaster. I mean, look, that said, if there were a decision to move everybody out and to rebuild the place, I'm assuming American companies would find a way to move all the rubble out. But I mean, that's kind of question number 17, right? The first 16 are unanswerable.
So what are next steps? Just maybe a little bit aside from what we heard from President Trump yesterday, what are next steps in Gaza between Israel and Hamas?
Look, in theory, there are working groups that are going to Doha tomorrow to sort of work through the next phase, which is more hostage releases, more prisoner releases, and so on. Those things are pretty shaky. Israelis are quite shaken up by the release of many, many people who've killed a lot of Israelis. And they are, on the other hand, of course, embracing the hostages coming home. But it's in theory, that's the next phase. And I think that one of the things that Trump may have been doing is this kind of, here's an extreme notion in order to get all the hostages out and to get the Israeli government to agree to a true end of war. That may also be what's going on.
An exhausting time. Ethan Bronner, thank you so much for your leadership here. Our coverage across the Levant from Beirut down to Tel Aviv and on down to Cairo as well. Again, the president meeting with the leaderships of Jordan and Egypt here in the coming weeks as well after this stunning session with Israel in the news of the last 24 hours. I've hardly mentioned a data check today. I'm so sorry, folks. The VIX, 17.39, remarkable stability there. Futures pull back. It's somewhat fractional. NASDAQ down 0.8%. I'm going to suggest that off Google as well. Russell 2000 gives me some green today. What I did note is a 10-year real yield. The 10-year, my eyes are, come on, Paul, I'm just going down in flames.
10-year treasuries.
2.04.
Yep.
Got it. Nailed it.
Exactly. And, the nominal 10-year treasury yield's off about 5 basis points today. 4.46%. So we're moving higher. Yeah, sure.
There's a little bit of a disinflationary tendency here, and you see it with the weak dollar pulling back on DXY 107.
And Tom, ADP employment change just hit the tape here. 150,000 was consensus. Came in higher than that. 183,000 for the employment change. That's per ADP.
Are we believing that? It's the beginning of our jobs day coverage.
The beginning of our jobs. We got lots of jobs data coming up.
Claims this week. Tomorrow, 213 is the statistic.
Yep. So we'll see, and we'll get that on Friday. The
non-farm payrolls. 170.
Exactly.
There's a whisper number. I don't know what it is.
I'll check it out.
170. Oh, you can check. You have. It's too much. Unemployment rate 4.1%.
Ooh, it's 195. The whisper number.
Is a bigger number.
Yes.
A more sprightly number.
Yep.
Interesting. We'll have team coverage at 8:30 here on Friday with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Donald Trump has suggested that displaced Palestinians in Gaza be permanently resettled outside the war-torn territory and proposed the U.S. take ownership in redeveloping the area.
Virtually every building is down. They're living under fallen concrete that's very dangerous and very precarious.
The president made the comments as he held talks yesterday with Israeli Prime Minister Benjamin Netanyahu at the White House.
He's exploring it with his people, with his staff. I think it's something that could change history.
The two leaders also discussed the fragile ceasefire and hostage deal in the Israeli-Hamas conflict. The Trump administration says it is pulling almost all U.S. agency for international development workers off the job and out of the field worldwide. The order takes effect just before midnight Friday. Sweden's worst mass shooting has left at least 11 people dead, including the gunman at an adult education center. As officials warn that the death toll could rise, police believe the perpetrator acted alone, but they have not said if he was a student or what his motive may have been. Tuesday's violence occurred at a school west of Stockholm. Police say one person is dead and 5 people have been wounded in a shooting at a warehouse in New Albany, Ohio. A spokesperson says the suspect is no longer believed to be at the warehouse, which belongs to a company that makes products including cosmetics and toiletry. New Albany Police Chief Greg Jones.
We believe we may know their location. We don't have any reason to believe that they are a general threat to society. More that it appears at this point to be a targeted type of attack.
Chief Jones says the suspected gunman has been identified as Bruce Reginald Foster. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom Pauli's.
Okay, it's Wednesday. It's time to begin our Super Bowl guesstimate. Born in Aberdeen, South Dakota, Britain, South Dakota was his high school. Wow. South Dakota State was his college. And Tyler over at CBS Sports says, is it Dallas Goedert?
I don't know.
A tight end?
I think it's Goddard.
Thank you, Ari. Yeah. Ari to the rescue.
As always.
Dallas Goedert's going to be your Philadelphia Eagles MVP.
Really?
Away from all the other fancy names like Mahomes and Barkley.
Yeah, I'm thinking Saquon Barkley, man.
Good morning, South Dakota.
Right, exactly.
Sorry.
He was named Dallas because his father was a huge Dallas Cowboys fan.
Ah, there you go. All right. Well, we got KC, 1.5 point favorite.
Do you know, it was amazing. It was so emotional. The fifth or sixth bar off spring, he lost count after four, was named Lions Bar.
Yep, there you go.
The first offspring loves NASCAR too. So.
Dallas Goedert. Dallas Goedert. Do I get that right, Ari? Goddard. Dallas Goedert. He's my guy. Thank you, CBS Sports, for that. He could win. He's a tight end.
Yeah.
He's not. Maybe Taylor will.
Okay.
Things could change.
I get it.
Futures -25. The VIX 17.38. My NFL knowledge, it's just off the charts. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers, minimum financial commitment offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, well, we've got futures falling this morning. Investors kind of worrying over the economic impact of the trade war. You had Richmond Fed President Thomas Barkin saying it's difficult to know the impact tariffs will have on Fed policy. Right now, we'll go to NASDAQ futures. Down 0.7%, 155 points. Dow futures down 0.2%. We have S&P futures down 0.4%. The 2-year yield at 4.18%, down 3 basis points. The yield on the 10-year 4.45%, and that's down 5 basis points. To commodities, have to point out gold rose to a record. We have COMEX gold at $2,886 an ounce. Over to oil, Brent crude down more than 1%, $75 a barrel. WTI crude $71 a barrel. The Bloomberg Dollar Spot Index down 0.2%. More economic data. This January report on employment change from ADP. Well, it came in higher than the upwardly revised prior month, but it was also higher than expected. 150,000 was expected, came in at 183,000. Comes ahead of Jobs Day Friday. We are not done yet. A few minutes from now, we'll get data on trade balance, followed by a read on services PMI from S&P Global, and also the ISM Services Index. To earnings we go. We'll start with Harley Davidson. Off more than 2%. Revenue for the fourth quarter missed missed estimates. And finally, people, well, they love their burritos. And analysts, they were expecting a little bit more from Chipotle, and they didn't get it. Sales rose less than expected. Its shares are down 5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. We got a Beanpot thing going. Good morning, 92.9 FM.
Yeah,
For those of you
sure.
across the nation, there's this incredible hockey tournament in Boston. It's just fun. There's just no other way to put it. It's really serious. It's like four
big
great
time.
teams.
Yeah.
Harvard's sort of, a little bit off their game, I'd say. But
okay.
Northeast has been killing it. And
Yep.
BUBC in the final. And,
Oh, okay.
it's like all of a sudden, folks, there's 16 or 18,000 people in the arena. It's like, oh, hockey, February, must be the Beanpot. It's 60 State Street in Boston. Joining us, Craig Sterling out of Washington University, St. Louis, and other academics. Craig Sterling with a strategy on the market. I mean, I got double-digit earnings or something near that. Do you extrapolate out continued prosperity, Craig, where I have to be in the equity markets?
Yeah, we think equity markets is a great place to be, but we're definitely seeing a regime shift that started playing out in the third quarter of last year.
All right, so talk to us about that regime shift, because this is a market that's been driven too much toward too much of a degree by the Mag 7. What are we seeing now?
Right. Well, this is an important point, because what really drove the Mag 7 for 23 and 24 was they were pretty much the only companies growing earnings. But what we're seeing this year, we're starting to play out, is you're going to see a broadening of earnings recovery from many industries. And so last year, the Mag 7 outgrew the other 493 by 30% in terms of earnings growth. That will shrink to 7% this year. And with valuation gaps so wide, it's a really important time to understand this regime shift.
Does that pose a risk for the market here, Craig? Because for many investors in the market, they've only known technology to be a leader of the market. Can other sectors, other factors drive this broader market higher?
I mean, we've kind of started to see it, right? I mean, the Mag 7 it's not monolithic, and some of these stocks haven't done much for the last year or so, and we've seen other industries groups start to take leadership, like financials. So it does not need to be just a small group of stocks.
Is it centered off free cash flow? I mean, I haven't asked this since Bill Priest darkened the door a month ago, 6 weeks ago or though, but we talk about earnings and revenue dynamics and the growth, the macro growth story being a surprise. But Craig Sterling, in summary, does a Monday see a continued generation of free cash flow?
Yeah, because what's really happened and what has played out the last 2 years has been kind of an industrial and commodities recession, because companies overordered during COVID and after COVID, and now inventories are drawn down, managements have calling out bottoming, corporate sentiment is improving. So everything outside of AI, CapEx is starting to improve. So it's just, and the Trump election really catalyzed it. And we're really starting to see a lot of enthusiasm from companies that are spending.
I mean, Craig, I had a conversation with our Chris Collins. I mentioned this in the last hour, folks. I'm sorry, he said to me, do you use AI? And I said, I'm the last guy, Paul, to use AI, except I'm using AI.
Sure.
I find myself using it.
It's in almost everything these days. Craig, what sectors screen well for you guys if you are seeing a broadening in the marketplace?
Yeah, well, so I already brought up financials. Banks are having some of the best conditions they've had in a very long time. We're finally starting to get out of the 0% interest rate regime that started, and we have a positive yield curve, and regulations are moving their direction. We're hearing from bank management teams about loan growth. Their pipeline for loan growth in capital markets is fantastic. So that's an area we're very enthusiastic about. Beyond that, we look for companies that are economically sensitive, that are high quality, like cap goods, analog semiconductors, transports, that are all starting to recover from really what was a big slowdown.
Can you climb on board the airlines? When you say transports, when was the last time? Let's do some Dow theory with Craig Sterling. Transports, Craig, discuss.
Well, I wasn't really talking about airlines. I mean,
I'm kidding.
I'm talking more like the rails in particular.
Exactly.
They move everything.
Yep. Hey, how about, one of these issues that's really been, I guess, a little bit of a concern for some investors really over the last couple of months since the election is all this talk about tariffs. Does that factor into your investment outlook at all?
Absolutely. I mean, you can't not. It's certainly whipping things around. We try to look past the daily volatility of the latest tariff news, and companies will tell us, or management teams will tell us that they were more prepared for it this time than last time, 8 years ago. And if you look at the actual magnitude, it's like 3% of it'd be like a 3% increase on income, and it's definitely an offset. And you got to make sure you understand companies' supply chains. But the reality is companies are they're going to get more benefit from the extension of tax cuts and the massive shift in the regulatory regime that we're probably going to see play out.
How do you justify or rationalize double-digit returns this year after 2 bang-up years for the stock market? Are we in an extended bull market where it's normal to discuss double-digit returns this year?
I think it would be hard to call for what we saw the last 2 years. I think the odds of that happening are small, but that doesn't mean we can't see a positive return. And if we do see this regime shift, I mean, of course, it's going to hurt if the larger stocks underperform, but there is another, the Mag 7 is not 100% of the stock market. And you can see a broadening. If you start to see, financials, for example, or, cap goods, et cetera, energy, believe it or not, start to do well, that can carry the weight overall.
Craig Sterling, thank you so much for the Monday U.S. up in Boston. Greatly appreciate that. Good morning to 92.9 in Boston. Our economic indicators on this Wednesday into claims Thursday, into the jobs report on Friday. Brought to you by IBKR. Will the U.S. CPI, will it exceed 2.4% in March 2025? Trade your prediction with IBKR forecast trader. The yes was recently at 60%. Buy yes or no and earn $1 if you're right. Go to ibkr.com/forecast. We thank IBKR Interactive Brokers for their support. Ian Lingen publishing on ADP, Paul.
Yep.
A solid release with nothing to shift the perception of a solid 8:30 Friday a.m.
Yeah, I mean, I think that's kind of, the correlation between the ADP data and the non-farm payrolls isn't always the highest, but again, it's directionally coming in stronger than expected. We had a revision last month to the ADP, sharply higher as well for the employment change.
Pro tip, I mentioned it, Paul mentioned it, the 10-year real yield is in 18 basis points from like 2 weeks ago. In all the noise, the political noise, to 4 digits, 2.0290. I have a 2.03% 10-year real yield. Paul, are we ready for a disinflationary 1.99%?
But that would be nice. I'm looking at the 30-year mortgage, Tom. We're now just below 7%, 6.97% on your 30-year fixed mortgage.
Looking this weekend?
Yeah, maybe. And Lisa Mateo will be out there browsing, maybe.
But folks, this is, with all the noise going on, and I don't want to get into the politics of it. That's not what we do at Bloomberg. But, Paul, the distractions.
Yep.
And the fact is it's February 5th-ish, and we have a disinflationary set in.
We do, and we'll see what we get from the jobs on Friday, and the unemployment rate, and wage growth, and all that good stuff.
Paul and I made a pact. We're going to gaze at Moana 2 this weekend. Futures at negative 24. Stay with us from New York City on YouTube, across your commute. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Some disappointing results from Alphabet. Also, AMD sparking some concern about the outlook for mega cap tech companies. For example, Alphabet down 7%, AMD off 9%. And then we stick with tech. We go to Apple. Their shares down 2%. Sources are saying China considering an investigation of Apple's policies and also the fees that it charges its app developers. We'll go to NASDAQ futures, down 0.6%. Dow futures down 0.1%. S&P futures down 0.3%. The 2-year yield at 4.18%, down 2 basis points. The yield on the 10-year 4.45%, and that's down 6 basis points. We have the Bloomberg Dollar Spot Index down about 0.2%. Some more economic data coming in. The U.S. trade deficit, it widened sharply the end of 2024. This is on a surge of imports to the start of Donald Trump's second term as president. Right now, we want to go to companies making news. Sources saying Walmart eliminating hundreds of jobs, relocating its staff. Some workers based in Hoboken, New Jersey, other small offices, they're being asked to move to Arkansas, California. It's also closing an office in Charlotte, North Carolina, slashing corporate jobs there as well. And General Motors reportedly cutting almost half of the workforce in its driverless car unit. Sources saying it could amount to about 1,000 positions, which includes its CEO, Mark Whitten. That is your Bloomberg Business Flash. Paul and Tom.
You wonder if that's the theme here. A lot of right sizing.
Yep.
Companies under pressure. And
yeah.
Just Lisa there with what, 4 stories?
Yeah, exactly right.
Right sizing. This is an important interview because if you're at the Ned, which is a bar it's a hotel, but it's a bar or set of bars.
They got a nice.
It's somewhat in the vicinity of Queen Victoria Street and Cannon Street, and of course you see people there from DWS Alternatives.
Yep, smart
in
people.
London.
They know what they're doing.
Joining us now, pulling the lucky card, moving to London this week. Amanda Rebello joins us. She's been a huge value add for us on ETFs. We're thrilled that she could be with us. XTrackers Sales in all. Let's start with the why. Why are you moving to London? I mean, is it just like it's time to move with all the cacophony going on in America?
I think the US is still a fantastic country. There's so much going for it. Obviously, we've had a new president coming in, but I think ultimately the long-term benefits of being in the US are still there. My gig was to come here and build out our US business. We're the second largest ETF provider on the UCITS side. We thought that there may be a few things that some of our global investors can benefit from with us bringing expertise to the US. Obviously a very crowded market, but we've been able to get some traction with some expertise in thematics.
So this is moving back home for you.
It's moving back home.
It's moving back home. I got it. Okay.
Thematics.
Yes, exactly. So give us the latest. What are you seeing in the ETF business? Where are the funds flowing? Because again, Tom and I would talk about this all the time. We grew up in a world of mutual funds, and that's where all the money was going. Now ETFs have been an extraordinary growth story. Yep. So you're in a great business. It's better than equities in Dallas, but talk to us about ETFs.
Yeah, so it's fantastic. So at the end of last year, we crossed the $10 trillion mark globally in terms of ETF AUM. And then just in terms of flows, it crossed the $1 trillion mark. So just think about that, right? That's basically as big as the volumes of FX on a daily basis globally, right? When I think about when I was at an unknown competitor, but you can probably guess who, I remember we had a celebration for our AUM crossing the $1 trillion mark. And now, we've got many participants like that. Fee cuts, now we've got the second wave of new pricing. So,
does the stable 401k money migrate over to ETFs? Is that something 3 years out?
We're all waiting for this, and I think one component of that is going to be very much about all of us. A lot of the major asset managers have now filed for ETF share classes with the SEC. So there's around 45 asset managers who are now hoping that the SEC will allow for share class issuance of mutual funds. If you then have this opportunity, you can have the same exposures in your brokerage account as in your 401k. I think that the 401k mechanism is still going to be based on daily pricing, but when you think about all of the different ETFs you have versus all of the mutual funds you have.
Are you going to see lower fees to Lisa Mateo in her 201k with a pool of ETFs versus a pool of mutual funds?
We did see some fee cuts at the beginning of this week, which were on mutual funds.
Vanguard?
Vanguard, exactly.
7 basis points.
Paul, Vanguard is not next to Mansion House in London.
No, it's not. 7 basis points. Wow.
incredible. And that was the average, so there were some even lower than that indeed. But I think all of us are thinking about this. There's economies of scale that have come with the fact that ETFs have just like run away, and we have like fixed costs which can then be absorbed by a bigger AUM. It makes sense to be passing this on to end investors.
So it's a revolution.
It is.
It's
Totally,
seriously.
and it makes a ton of sense from a lot of. Definitely one way. Eric Balchunas, who does that stuff. From Bloomberg. Yeah, he's won us over. No question. Where are the funds going? Are they just going into the S&P 500 ETF? Or are they going more fun places?
Yeah, so I think the volatility that we've had for the past couple of weeks has been very interesting for all of us, definitely kept us on our toes. We had seen a lot of money last year going into NASDAQ in particular, but those flows have lightened off. Not everyone has seen buying opportunities on the dip. We've seen a great rotation into a little bit more flow on the European equity side, and that's great for DWS XTrackers because that's one of our core pillars in how we're helping investors. If you look at European equities and international equities, year to date, they're actually outperforming US equities. People often think they're a dog, right? But there's a great comeback, and especially when you look at it on a dollar hedge perspective, it's really making sense now.
I mean, you're so close to St. Paul's where you're moving in London. You can do. We're playing Mary Poppins today. You can do the Feed the Birds Tuppence a bag act.
Hopefully I'm better dressed then. Back in the old days.
It'll work, or go down to Covent Garden. But Amanda, what's so important here is everyone listening knows nobody can get a place in Paris. Nobody can get a place in London. What's been your experience of trying to find a place to put your head down at night?
I think that the market that I left is definitely different from the market that I'm now coming back to. We have still a lot of people living in the UK. We still have net immigration. You know, the new government is very keen to be thinking about further house building and so forth. But there's already, every time I go back to London, there's skyscrapers everywhere, not just office space, but also a lot of residential as well. And it's all over the country, not just London.
Yeah, there's like this, you read the British press and it's Labour and Tories and Nigel Farage and all this, not doom and gloom, but angst.
Yeah.
Am I right? It's booming? Is that a safe statement?
And I think maybe, don't want to get too political about it, but I think that the view we have in the UK is that immigration is still net positive for us. There's still workforces that we need for certain parts of services. We even with Brexit, we still have net migration from the EU as well. So.
Okay. Well, we got Bloomberg Daybreak Europe. You gotta become a nodding acquaintance. You can stagger from DWS over to Queen Victoria Street. It's an easy walk. But don't forget Bloomberg Daybreak London. But we'd still like to speak to you.
A lot of nice people over there.
Thank you.
A lot of friendly people.
Oh, it's killing. They do a podcast, folks, 15 minutes after the show starts, and the numbers on it. It's not Joe Rogan, but it's Joe Rogan-ish. Amanda Rebello, thank you so much. Greatly appreciated today. Greatly appreciate it. With XTrackers, with our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa, President Donald Trump said the U.S. should take control of the devastated Gaza Strip, move the area's residents to other countries, and turn it into Riviera.
The U.S. will take over the Gaza Strip, and we will do a job with it, too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site, level the site and get rid of the destroyed buildings, level it out, create an economic development that will supply unlimited numbers of jobs and housing for the people of the area.
In Israel, most politicians welcomed Trump's remarks. However, the proposal drew sharp opposition from Palestinians and other Arab officials. China is talking about President Trump's announcement about the Gaza Strip. China's Foreign Ministry spokesperson Lin Jian via a translator.
China always believes that the Palestinians governing Palestine is the basic principle of post-conflict governance. We oppose forced transfer targeting Gazan people.
Meanwhile, the U.S. Postal Service today said it is accepting all international inbound mail and packages from China and Hong Kong posts hours after the agency announced a halt on some shipments. Finally, millions of Americans are bracing for a winter storm that will stretch from the upper Midwest to New England. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Thanks so much, Michael Barr. Disney with a nice leap up here. And now we're coming in a little more sober, and we've actually pulled back. We went like a 112, 116, 117. And now I'm showing a 111, down $2.
I mean, Lisa was asking me just now, why is it down? I'm like, I've been doing this 35 years. I have no idea. I mean, it's just, I think there are still concerns about the relative profitability of streaming versus
and Disney
the
Plus,
traditional
the subscribers were a little light, right?
A little bit light there. I mean, it's now profitable, but the profit margins aren't what they used to be. But I tell people in the streaming business, just look at Netflix. That's eventually where I think Disney will get close to. Maybe not get the Netflix margins, but they're going to get close, so don't worry about it. Takes
Futures,
time.
negative 21. We're watching yields. We'll do a report on that here in a moment. From New York City, Bloomberg surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene ignoring one of the major stories of the day. The news flow is just extraordinary here. So, if I told you Google in the last 10 years, Paul, 20.3% per year.
Yeah.
And I guess it goes south a little bit this morning. 207 close, down to a 193. He's been exhausted. He's tanned and rested. He's taken a few days off here to recover from what was it called? Deep Seek?
Deep Seek.
Nailed that.
That was so 2 weeks ago.
It was so 2 weeks ago. Google is this morning. What does a guy like you, Mandeep Singh, learn from Google even if you don't follow Google?
Well, I follow Google and I really care about their business. And look, I think what they told us last night is, one, they are going all in with the CapEx like every other hyperscaler. So that raised to $75 billion, approximately 50% from the 2024 levels, is in line with Meta. I think where Street was disappointed was the cloud deceleration. And especially when you are coming out with, a raised CapEx guide and you're saying, demand exceeds supply and the growth decelerates, that's never a good thing. But to their credit, I think what they showed is search remains resilient. And in fact, search was the best performing business relative to expectations in the Q4 print. So really, search is changing if you think about it, from blue links to, all the new types of modalities that they're...
Modalities. I'm going to use that tonight at the dining room table.
So
modalities.
Why did the cloud business, why was the growth rate disappointing?
Oh, so there could be two reasons here. One is their main customers are, enterprises, and there could be Chinese enterprises in there that may be forced to, pare back given just the amount of scrutiny they are getting in terms of cloud consumption. That is one possible reason that, they are themselves cracking down on who is using their cloud. The other one is just lack of availability. And every hyperscaler has said, Microsoft said the same thing. They just don't have the compute to offer to their customers.
So can't you just make more computers and put them in more warehouses? Is that what we're talking about?
I mean, we're talking about data center constraints here. We just don't have enough data centers right now to put those GPUs and really rent it to the customer.
Who makes that?
But this is not the first time we've heard this. They literally, the demand is, am I right? The demand is so great, they can't supply the demand.
Wow.
And the street looks at that as a negative?
Because the growth was 35% last quarter, and this in 4Q was 30%.
But the margins were still there. I don't understand this. Why? Isn't that good news that there's a future revenue stream out there?
Yeah, so they spent $52 billion in CapEx last year. This year, they are going to spend $75 billion. So that should translate into cloud growth. Otherwise, why are you spending CapEx? And it will. It's just.
Do you like this? Came up with Chris Collins yesterday at Bloomberg LP, like a real job, not like you and me, like a real job. Quickly here, the AI at the top of Google search. Does Mandeep Singh use it? Do you like it?
I think they are giving you a lot of features on that search page, from Google Lens to Circle to Search. I mean, they are making it so easy for you to search anything now.
So if I search Let It Go, the song from Frozen, it's easier now with AI.
Yes. You can take your phone and pass an audio or a photo and it can search it without having to type anything.
I think the advantage here, Lisa, is our kids went through the Frozen stage without AI.
Unbelievable.
That is true.
All right, so give me, I need 20 seconds on Apple and China and that risk with this, the Chinese government.
Well, that is a risk for everybody. I don't think Apple obviously is more exposed, but what we are finding is everyone has supply chain links to China, and that way every vendor is exposed. Yeah.
Yep.
Z's out there. She loves Frozen. Her mom just emailed in and said, "You got to play Let It Go, or Z will be into tears." In honor of Disney, up and now pulling back. We did Mary Poppins. Mateo demanded we do Frozen. Yes. Good morning.
Bothered me anyway.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. We do another hour of Bloomberg Surveillance on your commute across the nation. Good morning, 92.9 FM, Boston. We're very beanpot today. We've done it. We don't have to do it in this hour, but BUBC. We'll have to see how that goes. Good morning to 99.1 FM. Just exhausting political schedule. We saw that yesterday. Who knows what we'll be talking about today. Thank you to Ethan Bronner in Tel Aviv for a terrific brief on Israel and Gaza. Peter Bookvar, Paul, publishing moments ago, The Book Report, B-O-O-C-K. The Book Report from Peter Bookvar. He adds his bottom line on ADP, and he says job hiring has been pretty solid, and that gets us to Jobs Day on Friday.
Yep, absolutely. We're going to see, how strong this labor market is. We look at the absolute number of jobs. The whisper number is 195. We look at the unemployment rate. We look at the wage growth as well, because that's important for folks that are dealing with inflation. You got to see the real wage growth.
And the real wage growth stays positive. A lot of people put a lot of weight into that.
Yeah, absolutely.
That's foundational.
Yep.
We'll have that for you as well. Let's digress here. BitDog can't get up to 100,000, but at least it's recovered a bit with a 10-year real yield, 2.04%. There's a disinflationary tendency this morning.
There is. So we're seeing that's a nice move. We're pushing up against 100,000. I call out oil. We're still at $72 a barrel
gold
in that range.
earlier.
And gold having another rip, up another $7. We're at, on that 3,000 watch for gold, Tom.
Yeah, the first time we've ever said that. Yep. There we are at 2883 is the way we measure gold here this morning. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And we've got futures falling. Tech stocks really disappointing. We have shares of Google, parent Alphabet. We were just talking about it with Mandeep, down 7%. Cloud growth stalled, spending surged, and advanced micro devices down 10%. Struggled to catch up with AI computing leader NVIDIA. So we'll start with NASDAQ futures down down 0.7%, 152 points. Dow futures down about 0.1%. S&P futures down 0.3%. The 2-year yield at 4.20%. That's little changed. And the yield on the 10-year, 4.47%. That's down 4 basis points. With tariff talk on the minds of people right now, we want to get to the Bloomberg Dollar Spot Index. Down about 0.1%. We move on to the Mexican peso, down nearly 1%. The Canadian dollar up is higher right now. It's stronger. We have the euro stronger. Bitcoin, like you said, up 2% at just above 98,000. Earnings, Disney, a magical quarter, 31% gain. Operating income, earnings blew past estimates. Its CFO said the streaming business alone could make $1 billion this year. Its shares have been all over the map, up and down right now. They are up about 1%. And Uber, steady booking growth, but it also reported that weaker than expected fourth quarter earnings due to legal regulatory expenses. That has shares down 5%. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Paul's like, Tom, we got to be serious. Economics, finance, investment, international relations. Forget about it. Joining us now, surveillance football correspondent Ira Jersey. Ira, I fell off my chair. Oh, excuse me, it's Brent Schutte. I saw Ira up there. So it's my fault. I was racing to Ira on Marcus Rashford. Brent Schutte's like, who's Marcus Rashford? Yeah. Let's talk at Northwestern in the Midwest, Brent Schutte right now. Thank you, Cy, for that. Brent Schutte, Northwestern, steady as we go. How could you be steady as we go in this political economic environment?
Certainly, I think it's a bit more uncertain and a bit harder these days, but I think you still focus on the long term. You think about valuation and you kind of filter out some of the noise. And I think that leads you to staying invested, obviously, but focusing more on areas of the market that haven't done as well over the past few years. There are certainly areas that have done well. The market has been incredibly narrow the last 2 years. And we think 2025 brings less market returns, but broader. And so we are focused still on the equal weight S&P and focused on small and mid-cap stocks, which you're starting to see green shoots of a broader economy.
Like what green shoots?
You've seen small business optimism increase quite a bit. That's been an area of the market that's been hurt, an area of the economy that's been hurt. You've seen the manufacturing side actually move into expansion on the ISM manufacturing. We'll see if that's just related to tariff pull forwards. You've seen the lending surveys, the senior loan officer survey. You've seen credit become a little bit more available to consumers. And so we think all those things will broaden out the economy, which will broaden out earnings and broaden out the stock market from just 7 names to something more like 493, or maybe even the S&P 600 and S&P 400.
Are you seeing that, Brent, in some of the earnings that we're seeing this quarter, maybe last quarter, maybe some of the guidance that we're getting?
You're seeing at least small caps are having a good earnings season, and you're seeing it broaden out just a bit more. I think you mentioned the word Google quite a bit opening up, and I think there's risk there. I mean, certainly those names have done well over the past couple of years, and they've produced positive earnings revisions. I think the question becomes, as you push forward, how much do you pay for those? And if there are other segments of the economy doing better or other stocks doing better, do investors focus more of their attention there?
Does conventional portfolio analysis work here? The things you learned in textbooks, are they applicable here?
I think they still are. It certainly feels like the last couple of years you've been rewarded for doing things that probably weren't in your textbooks. But I still believe diversification is something that investors should focus on. The biggest fear that I have, and I've seen this over my 30-year career, where people want to concentrate in the winners of the past few years. I saw it in the late 1990s with tech stocks. I saw it in the 2007, 2008, 2009 period with international developed, with emerging markets. And now we're back to the U.S. where people think that's the only game in the town, especially the large cap stocks, more focused on tech. I think history is a pretty good guide that you will see broadening and you will see new asset classes emerge as leaders in the next coming years.
Brent, if to the extent that someone wanted to diversify away, what are some of the sectors they should be looking at, do you believe?
I think less about sectors and more about broad asset classes. And if you look at small cap, for example, there are more industrials, more financials in there than perhaps the S&P 500. And so those are areas of the market that I think you can think about from the sector perspective. Look, the tariffs are a wild card. That's where I'm not for sure how to handicap those. I think the market voted on Monday and suggested that perhaps the tariffs are inflationary in the near term. You saw the inflation expectations on the shorter terms, the break-evens move up with an unintended or probably less desirable decrease in growth. I think if you look back to the last term, the one thing that the president judged his success or failure on was based upon how the market did. And every time the market started to falter on the back of the negotiations, he would pull back just a bit. I think the risk is still that he kind of misjudges where that fine line is. But certainly that's where I think the rubber meets the road, and maybe that pullback on Mexico and Canada was because of the adverse market reaction.
Brent, how about in the fixed income space here? Again, you can sit in the 2-year Treasury at 4.2%. Is that good enough, or do you suggest folks take some credit risk out there?
I mean, if you think about your liabilities and having a liability stream over the next 1, 2, 3, 4, 5 years, I want people to continue to be humble, to continue to move out on the curve. I don't think you need to take excess risk in bonds when the 10-year Treasury yields 450. And so that's an area that we focused more on. I think there are still left tail risks that are out there. We are later in an economic cycle. You're talking about a low unemployment rate. You're talking about wages. I know it's positive when wages rise, but historically when they rise too much, it crimps margins, and that's typically a late cycle type of an economic barometer. And so I want to make sure that people still have exposure to fixed income and are not just concentrated in the front end, because no one knows for certain what's going to happen in the next 3 to 5 years. Just like they didn't know when Treasury yields were at 50 basis points a few years ago that we'd be now sitting right back at 450 today.
Brent, you got to join us in the studio when you're in New York next time. Brent Schutte with Northwestern Mutual. Just huge value add there on the distance we are from 60-40. Is 60-40 germane anymore? What do you think?
Yeah, I think so. I think, but got to throw alternatives in there too. People say you have to have some allocation.
We heard that
there
from Krishna Mamani yesterday at
exactly
Lafayette. Very, very big. Okay, we're going to do this now, and I do think it's germane to our American audience. You're going to say, Marcus Rashford, who cares? But the answer is, this is really, really an interesting story. Joining us now, our Aston Villa correspondent, Ira Jersey. We'll get to fixed income here, his expertise at Bloomberg Intelligence as well. Ira, this guy scores, and he points a finger at his head because he's totally inward with a drive. Let's begin with the failure at Manchester United. What happened?
So I think Marcus Rashford just didn't get along with some of the managers at United, and he probably needed a move. For Villa, they got rid of their number 2 striker and sent him to Saudi Arabia for a lot of money. So they needed to backfill because, we've talked about this before, but Aston Villa playing in both the Champions League and the Premier League, they needed more depth. And if you look at their record after Champions League games in the Premier League, they only have 1 win after 8 different Champions League games in the Premier League. So, yeah, they needed more depth, and someone like Rashford makes a lot of sense.
But there's got to be huge equivalents in American football, in American baseball, in the NBA as well. The kid, Paul's 27 years old. Mm-hmm. And he can score on a whim. Whenever he decides he needs to score, boom, he's done. What's he going to add to Aston Villa? I mean, this has got to be magic for them, right?
Well, Ollie Watkins, who's the number 1 striker at Aston Villa, I would say is on par with Rashford, at least in recent form. But I think it gives Rashford more of a platform, and certainly going into a World Cup year next year, I think Rashford wants to put himself in the shop window. And because he wasn't getting any minutes at United, going to Villa makes a lot of sense for him. Maybe gets a trade, and then he wants to play on the World Cup roster.
And he would be on the English. He'd be on the English team, right?
Yeah. So he and Ollie Watkins are both English strikers. So, but if Rashford wants to be in the squad at all, he's going to need to play. And managers at the international level don't pick players who aren't on the pitch.
Lisa, was that enough soccer talk?
Yes, please.
Exactly.
Ira Jersey.
Hey, why don't we talk about Aston Villa having Black Sabbath come and play there on July 5th? So that's what I'm excited for too.
Oh, come on, Cy. We care about Black Sabbath. I mean, come on. I mean, where are we? Can we get a weekend update? Did you buy the tickets, Lisa, for the weekend at MetLife?
No, and I had someone in tears, but that's okay. I'm hardcore.
Ira Jersey with Black Sabbath in July. Paul, hell save us.
All right, Ira, I've got my 10-year Treasury kind of drifting down here. We're now below 450. We're at 446. What are you seeing in your Treasury market these days?
Yeah, so I think people are risking, and Brett, your last guest, talked about this, is that growth expectations are coming down just a little bit in the fear of of a tariff war, right? So when you have a trade war, that yes, you might get slightly higher prices in goods in particular over the near term, but importantly, it usually slows down economic activity, and with slower economic activity means a rally in rates. Importantly, if we close below 4.49% on the 10 10-year. That's actually a pretty important technical level. So, so the next stopping point would be down toward under 4.25, actually.
Really?
If you look at the big move, yeah, we've broken a pretty. Basically, the yields have been trending upward since last September, and we've now broken that trend line, which is a pretty big signal, I think, for the market. That look, the risk now is for rates to rally, not rates to sell off a little bit more.
So what is that? I mean, if you're the Fed, do you just again kind of sit back and say the market's kind of working for us?
I think so, and certainly the fact that you had long-term interest rates move up a little bit, that did a little bit of the Fed's job in terms of trying to quell inflation and inflation expectations, which have obviously turned around a little bit since the tariff implications. I think from the Fed's perspective, and you even heard Mary Daly talk about this yesterday, saying we can be patient, and I think that the Fed is going to skip March again. From my perspective, Paul, what that means is over time, the longer the Fed is on hold, the less likely it is that they're going to cut again sometime in the future. So, and if we all talk about R-star and where the real neutral rate is and the like, personally, I think we're probably close to being there. I think 4% on the funds rate is probably pretty close to neutral. And unless the economy really falters, the Fed can do nothing.
I guess a two-part question. I'll let you go with it, Ira Jersey. The answer here is I got a 2.03 10-year real yield. To me, that's a shock on this Wednesday morning. What does the signal of a 1.99% 10-year inflation-adjusted yield?
Yeah, so we've obviously come back a lot. The fact that we were at 1.5%, now we're closer to 2%, is a signal that the market thinks that growth is still reasonably good. And yes, we've rallied a little bit. Certainly this week we've seen real yields go from 2.25% down to 2%. But you're still at 2%, suggesting that you're going to have okay growth going forward. If the market was really concerned about a near-term recession, you'd wind up seeing 10-year real yields probably closer to 1.5% to 1.25% than where they are right now.
So what's the next data point that we should be looking at? And please don't tell me it's an auction I got to follow.
Thank you.
No, although Paul, we did have the refunding announcement today, but it was a snoozer, so I won't talk about that. It was exactly as we expected.
Right.
Yeah, it's got to be Friday's employment report, right? So wages. Right. Do we still have decent job growth? And if all of those things happen, you wind up, probably with the 10-year yield not doing much of anything, but the 2-year yield might actually sell off a little bit and wind up with slightly higher yield, say to 4.3% or so.
It's like watching paint dry. What are money market funds doing, Ira? Are we just putting ever more trillions of dollars in money market funds at 5%?
We're pretty close to $7 trillion in money fund assets, and there's this insatiable demand for T-bills right now. So that there are some people who are really worried that there's this wall of T-bills that needs to be refinanced. Don't worry about it, because money market funds are going to own all of them. So
YouTube is lit up. Ira, help me here. I got Ozzy, Tony, Geezer, and Bill, July 5 at Villa Park. Explain for Birmingham what a big deal it is to have the lads from Birmingham bring it all back 40 years later.
Well, Ozzy Osbourne talks about himself as being the biggest front man to come out of Birmingham, and I would have to agree with that. That's number one. And number two, this is the first time that Black Sabbath has gotten together for 20 years. And they're playing Villa Park, which is their hometown. So, 30 years ago, I went around the Birmingham pub scene looking at all the alternative rock and hard rock bands that were playing, trying to do what Black Sabbath did 30 years before that. And I have to say, it's definitely a good town for music.
Ira Jersey, thank you for our report, our Black Sabbath correspondent
Birmingham
this morning, particularly there, Marcus Rashford. I don't understand it, but I guess it's a huge deal. It'd be like the Lions losing, their quarterback. It would probably be.
Well, that's not a big deal.
A deal. Red and green on the screen right now. We're open in 12 minutes with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Donald Trump is proposing taking over Gaza, rebuilding it, and relocating over 2 million Gazans.
I think the potential in the Gaza Strip is unbelievable. And I think the entire world, representatives from all over the world will be there, and they'll live there. Palestinians also. Palestinians will live there. Many people will live there.
Trump's proposal was welcomed in Israel but rejected in the Arab world. President Trump's Gaza proposal has drawn a quick reaction in Washington, as we hear from Bloomberg government reporter Jack Fitzpatrick.
The resources it would take and the level of U.S. involvement, if you take the president at his word and interpret this as a sincere plan, would be massive. And that's why it would take a lot of congressional involvement, a lot of U.S. resources.
Bloomberg government's Jack Fitzpatrick in Washington. The U.S. Postal Service said this morning that it's accepting now all international inbound mail and packages from China and Hong Kong posts, hours after the agency announced a halt on some shipments. The Postal Service, in an emailed statement, said the USPS and Customs and Border Protection are working closely together to implement an efficient collection mechanism for the new China tariffs to ensure the least disruption to package delivery. It comes after President Trump had revoked a rule for China, which previously allowed small packages under $800 to enter the U.S. duty-free. Police are searching for a male suspect in a workplace shooting at a cosmetics warehouse in Ohio that left a worker dead, 5 others wounded. New Albany Police Chief Greg Jones said that there were no reports of any kind of confrontation or dispute that would have prompted last night's shooting. Jones says the suspect had been at work for some time before the shooting. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Guys, Ira Jersey out front. I mean, this thing in Birmingham, England is like Metallica's going to play. Pantera. Sammy Hagar's going to be there.
Nice.
Limp Bizkit, some of the people from...
I mean even I know that's a big deal.
It's a big deal.
Yeah.
I mean, this is like a metal Nirvana thing back... I mean, I don't mean mention the band Nirvana. Jonathan Davis of Korn. Remember when Korn broke? It was like, are you kidding me?
Who's Pantera?
Who's Pantera? That's
Heavy metal
un-American,
bands.
Lisa. Come on. You know, but it's like, I'm sorry, Slash is going to be there from Guns N' Roses. I mean, this is like I got ducky bumps. I mean, it's like too much. Wolfgang Van Halen's going to be there.
Nice.
You know, it's like metal time. We should do a remote.
Yeah,
July
absolutely.
4th weekend.
Yeah, I'll make a phone.
Us and Ira Jersey, Birmingham, England.
Yeah.
My wife introduced me to Korn. That is because she loves Korn. Yeah, she loves it. So, and she loves Rage Against the Machine. Well,
they're going to be there.
Well,
You know?
wow. I'm just
Tom Morello's going to be there from Rage.
Wow.
You know.
Springsteen.
See, I know it's a big deal.
You got to have a star tantrum and have Mrs. Barr come with you to Birmingham when we cover this thing.
Don't give her any ideas, man. Because
Can
she'll
you see
accept
me playing an all Black Sabbath music outro one day?
Who's the band member in the bow tie? Yeah, I love it.
Exactly. We'll have to see. Ira Jersey, thank you for that update from Birmingham, England. As well. Paul, what did we learn today? I'm looking at, you mentioned it, lower yields. I mean, it's irrefutable.
It is. It's interesting. So hopefully the mortgage rates will go down. But again, the 10-year
When you said
Treasury,
under 7%.
just under 7. So see where they can go. But 4.45% on the 10-year. But in the futures, Lisa's got to get working to get this market open in 10 minutes. But we got kind of mixed futures, red and green on the screen. No real direction here today. Nasdaq taking it on the chin, just a little bit off 0.6%.
Mona Mahajan coming up here with a good brief, really well timed to say the least. Stay with us on YouTube, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report is sponsored by IBKR. Will the percentage of the U.S. experiencing drought conditions exceed 18% on 2/18/25? At IBKR Forecast Trader, the yes recently at 35%. What's your take? Trade your prediction at ibkr.com/forecast. All right, we've got a little mix of red and green on the screen this morning. Investors still worried over the economic impact of the trade war. So we'll start with NASDAQ futures. They're down 0.6%, 129 points. S&P futures down about 0.2%. But Dow futures now little changed, up about 10. We have the 2-year yield 4.19%, down 1 basis point. The yield on the 10-year 4.46%, and that's down 5 basis points. Over to commodities, we have to point out gold $2,885 an ounce for COMEX gold. Over to oil, Brent crude down more than 1%, $75 a barrel. WTI crude $71 a barrel, and the Bloomberg Dollar Spot Index down about 0.2%. More economic data out today. January report on employment change, ADP, came in higher than expected. Then we go to the U.S. trade deficit, widely sharpened to $98.4 billion at the end of 2024. And we want to go to shares of Novo Nordisk because they're higher this morning. ADR's up 4%, forecasting another sales surge this year. It's building on that supply for Ozempic and Wegovy. And then we go from weight loss drugs to fast food. Yes, Chipotle down 5%, sales less than expected. Competition ramping up with those aggressive discounts. For on-demand news 24 hours a day, subscribe to Bloomberg News now. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. We're going to do this quickly here because we've got the market opening coming up in 4 minutes. Mona Mahajan with us to the opening and after the opening with Edward Jones, Senior Investment Strategist. You have what I would consider the most prestigious double degree in America. Out of Wharton, the idea of doing finance and computer science, when it happened, I remember, it was an absolutely original idea. Mona Mahajan on Mag 7. It's got legs. AI has legs.
It certainly has legs. It's a long-term holding, but this year could be volatile. So we've already seen a bit of that. Keep in mind, this is not only a cohort that got a little bit of extension on the valuation front, but now is also facing threats like competition from China and other players, like tariffs as well. And, you know, some of the retaliation we saw from China, for example, on Apple, already weighing on some of the Mag 7 as well. So keep in mind, this is a year that we want to remain diversified across sectors, across asset classes, large cap and mid cap, growth and value.
So what are you seeing just out of earnings? Because, you know, one of the themes coming into 2025 is we're not going to get a whole lot from the Fed this year, probably. 1, maybe 2 rate cuts. Yeah. At best. So it really has to be earnings that have to deliver if this market's going to move higher. How do you guys think about that?
Yeah, it's a great call out because S&P returns are really a combination of valuation expansion plus earnings growth. Valuation expansion, as we just highlighted, probably not going to contribute all that much, maybe even a little bit of negative contribution in some sectors. So earnings growth will be the driver of returns. We continue to see 10 to 15% earnings growth this year. Of course, that is predicated on a consumer that continues to hold in there, a labor market we'll see on Friday that continues to remain resilient as well, and a U.S. economy that, you know, I looked at Atlanta GDP now, 3.9%.
Well, help me with at the margin. Do you sell Mag 7? I don't hear you saying that.
Yeah, you know, we think you could do a little bit of rebalancing if if your Mag 7 and your tech has gotten in an outsized way in your portfolio. You may want to rebalance that with the other sectors. But generally, we're in the camp of complementing. We want to make sure.
What's that mean?
If
you got to go to Wharton to say that. What in God's name is complementing?
Well, you know, if you owned all largely tech and AI in your portfolios, you actually did pretty well the last couple of years. We think the way you do well in 2025 and the next couple of years is you have to own growth and value. So you want to make sure not only tech sectors, you have industrials in there, financials, healthcare, mid-cap stocks as well, bonds.
What do you do with tariffs? Does that even come into your calculation, or do you just say, boy, that's noise, I'm just not going to worry about it?
Yeah, you know, look, the tariff uncertainty has weighed on this market, no doubt. And we know the old adage, markets don't like uncertainty. And this is a source of, will it happen, will it not happen? What I will say is there was probably a growing fear over the weekend when we were thinking about 25% tariffs on our biggest trading partners. Now, that was walked back on Monday. And we did seem to view tariffs more as a negotiating tool after that. So we got some concessions from the border, from our neighboring, economies on the north and south, which I think provided a bit of relief for the markets and the broader economy as well.
I want to come back and talk about the incredibly unique perspective the firm Edward Jones has. Paul, they're a totally twisted firm. They have a handle on America's kitchen table like no one else. We'll talk to Mona Mahajan about that here in a moment. Red and green on the screen right now. Hey, the VIX 16.96. Paul Sweeney was right about that. I got a 10-year real yield 2.0299. We'll go there. It's a 202 handle.
Okay.
I got disinflation. The ones that got dollar weaker here are 107 DXY. It was interesting day. But mostly all of us in awe of Lisa Mateo's earnings report. Talk about breathless in Seattle. Lisa Mateo with the market opening.
I love the intro. Yes, midweek trading kicking off. We'll start with the S&P 500 right now. Down 0.2% or 13.6024. We go to the Dow. Little change, down about a point at 44,552. And then finally off to the NASDAQ as it starts to kick in. There we go. Down about 0.6%, 120 points, 19,528. So now the 2-year yield, 4.19%. Down 1 basis point. The yield on the 10-year 4.45%, and that's down 6 basis points. Want to point out spot gold, $2,867 an ounce. We have Brent crude $75 a barrel, WTI crude $71 a barrel. The Bloomberg Dollar Spot Index down about 0.2%. At the open, have to check in with Google parent Alphabet right now down 7%, and we have AMD down 10%. That is your Bloomberg opening bell report. Paul and Tom.
And there's a volatility, Paul.
Yep.
AMD down 10%.
Yep.
I mean, I don't, where are we on Disney, Ari? Help me.
I got the Disney. DIS equity.
DIS
BQ.
is a symbol.
Yeah, the BQ for the Bloomberg quote pops up at the down. Up 3%. Disney up 3% here today.
What do you feel the emotion of Edward Jones clients across this nation?
Yeah, and great call out, by the way. Edward Jones now 9 million households across the U.S. We are in every county except one in Texas. We're trying to get that county. We have, we are really have our eyes and ears on the average
What's
U.S.
the
household.
mood?
And the mood, I will say there's parts of the country that are feeling a little more optimistic. This is an economy, as we talked about, the labor market is held up. The economy is doing okay. Inflation is a concern, and that is still a concern. And, it's tough because we went from a 9% inflation rate. We are back to, 2.9% on headline CPI, but that's still year-over-year growth. Your prices are still going up, albeit at a slower pace of growth. And so this is probably the dichotomy between lower income and that mid and upper income household. Mid and upper income, they have participated in growing stock market. Even their houses are starting to show some signs of life as well, house prices. And so they're...
You mentioned that.
Yeah.
Under 7%.
For the mortgage,
Hopefully, yeah. And, they're feeling okay with their wealth creation that's happened over the last couple of years. So we want to be mindful of both ends of the spectrum, but economy is really driven by that mid and upper income consumer.
Fixed income, what do we do here? I mean, again, the 2-year Treasury, 4.2%. That's not a bad way to make a living. Do I take some credit risks, or how do you think about it?
Yeah, so within your investment grade portfolio, we continue to feel like you could add a little bit of duration here. Even at 4.5%, slightly under on a 10-year, that is still at the probably towards the high end of a 10-year Treasury yield range. And we do think, Fed is probably on hold for now, but could we get 1, possibly 2 rate cuts during the remainder of the cycle? Yes. And so we do think an investment grade bond, for 10 years, you can lock in 4.5%. If you're close to retirement and you're looking at maybe for a 6 to 8% return, this is not a bad part of your portfolio. So we think it's a good thing for balanced investors to have yield once again.
How about alternatives real quickly?
Yeah.
For an Edward Jones client, do they think about alternative investments, private credit, private equity?
Yeah, for our average client, we can get a lot done with just equities and bonds. We know the old adage.
Thank you.
I totally agree with invest early, invest often. Some of the high net worth clients, though, starting to look at parts of diversification.
I've never said this, I've never thought this. Edward Jones on BitDog. Did they want to own Bitcoin?
We think very speculative still. We like assets where we can model out cash flow.
She's so belt and suspenders.
We want to be able to, cash flows, discount them. We can't do that yet, so not there yet.
Oh, come on. There's no underlying.
And, there's been other ways to make a good living and return over the last couple of years.
We should do a joint interview, a 1-hour interview. Mona and the wonderful talent from Robinhood. Have Robinhood and Edward D. Jones together.
Yeah, sure.
That would be like lights out.
Yep, absolutely.
Mona, this has been hugely valuable. Don't be a stranger. Mona
Thank you,
Mahajan,
guys.
we're the senior investment strategist. Edward Jones, iconic across America. Can't say enough about this. Stephanie Guild, thank you, Ari, for this. Steph Guild from Robinhood is just wonderful. Whole different tone there of clients and what we see. And that's true of everyone we face. We try to understand the firms that our guests represent. And let's make it clear, our guests are our foundation. They're the conversation of Bloomberg surveillance. Dow, green on the screen, the VIX 16.81. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Matei. We've got the NASDAQ leading the losses this morning. This is an underwhelming result from companies like Alphabet, Advanced Micro Devices. That's really starting to revive those concerns about when the billions of dollars that are spent by the tech industry on AI is going to start to pay off. We'll start with the NASDAQ down 0.4%, 96 points. The S&P 500 down 0.1%, 8 points. We have the Dow up 0.1% or 44 points. We have the two-year yield at 4.19%, down 1 basis point. The yield on the 10-year, 4.45%, and that's down 6 basis points. We have the Bloomberg Dollar Spot Index down about 0.2%. To earnings, I want to point out Disney because it's been going back and forth all morning. Right now, shares down nearly 1%. Then we go from Moana 2, because that's a big thing for Disney, to Barbie, because Mattel is up 13%. Better than expected fourth quarter results. It also said, though, it may have to raise the price of its toys, like Barbie and Hot Wheels, because that's to offset the cost of tariffs on goods made in Mexico and China, where a lot of its products come from. And then Oreo cookie maker Mondelez, their shares down this morning. Annual forecast, organic revenue profit fell below expectations. And finally, some travel news. Some more U.S. tourists are sticking to the States, unless you're Tom Keene. The European Travel Commission says the number of U.S. travelers going to European trips, well, they fell the lowest level since 2021.
Yeah, I'm seeing I'm seeing way more emails. You'll love Dubrovnik. Let us get you to Dubrovnik. Airline
enticing
emails.
You. Okay.
Out on YouTube, I'm. They said to me, "We're doing live chat on YouTube," and I said, "I don't care," and it's fabulous. We mentioned Black Sabbath. Thank you, Ira Jersey. Some guy's first concert was in sync. Andreas, get a life. And this is great. His first concert was Cheap Trick and Graham Parker in the Rumor. You don't know who that is.
I know. Yeah.
Do you know Graham Parker in the Rumor?
I know Graham Parker, not
with
the Rumor.
Brinsley Schwartz.
No.
Okay, that was a guitar player.
Yeah.
It was like a whole UK New Wave thing.
First concert, Lisa?
Oh, gosh, Mark Anthony. Yeah, salsa concert.
My first concert is on YouTube in black and white. Are you ready? This is early Three Dog Night. Early Three Dog Night, way back. And it was spectacular before, all the poppy stuff they did. It was really, I'll never forget Jimmy. He said, "We're talking here. Come on, Cy. We're talking Black Sabbath, Graham Parker and the Rumor." And who? Mark who?
Mark Anthony. But I'm getting killed out on YouTube for not knowing who Pantera is.
She'll get up to speed on Pantera to Save Thursday. Why don't you bring in our wonderful guest from BlackRock?
He came all the way from San Francisco just to talk music. Steve Lapley, Global Head of iShares Fixed Income ETFs at BlackRock. That is big, folks. So when I talk to people from BlackRock and ETF business, it's just, where are the flows going in your fixed income world? Are they just going into the steady 82-year Treasury stuff? Or do they want to take a little bit more, get a little bit more creative?
So the pattern in the past couple of years has been a lot of flows into high quality, and Treasuries included. Yep. This year we're off to a pretty big start. We're at about, globally we're at about 50 billion in the industry. In the US that's around 40 billion. For iShares, we're at around 13 billion so far this year already. Over half of that's in Treasuries, but it's interesting because it's kind of split. A decent amount, call it 3 billion, is at the very front end of the curve, and then around 2 billion is at the very back end of the curve in TLT. Really? So you are seeing investors sort of spread their bets here, and then after that, you have flows into investment grade and the ag as an example. So still pretty high quality stuff.
BlackRock's like the Vatican. I mean, I don't know who's doing what at BlackRock. It's so large. An hour ago, BlackRock expands access to cash management strategies with the launch of an active money market fund. Are you doing a triple leveraged all cash fund? Is that what's going on here?
Plain vanilla money market funds. So we launched 2 of them today. So we launched a prime fund. It's a PMMF and then a government fund. GMMF.
Why do I need that?
Well, so it's the ETF wrapper has really innovated fixed income. Yep. This is an extension of that. The place we have not been yet is in the money market space. So it's a logical extension of what we're doing. Why do you do it? It gives you access to exchange trading of money market funds, which you actually can't do currently. So this is an innovation in the space to be able to trade money market funds on exchange.
You came all the way from San Francisco. I'm going to cut to the chase. Good morning, Abby Johnson. Fidelity owns the cash management idea. They stole it from Merrill. We all know the history. Okay, how are you going to be different from your good competitor?
I mean, it's just a different way to express the same thing. Cash is going to be an asset class for the foreseeable future. Yeah, the Fed's going to cut a couple more times. We'll see. But cash is an asset class now after we've renormalized rates.
Paul, let's revisit the math. Triple leveraged all cash. You gross out at 14%. You take a field goal, 3% fees. You're net clean like 11. Sure. It's like a double-digit return.
It's not bad.
Can't miss.
What are you seeing in the riskier parts of the market, like high-yield leverage loans in the ETF space? Because that's where the returns have been.
Yeah, so I mean, high yield has been, something that's kind of been overlooked the last couple of years, but it just keeps on generating returns. So last year was around 8%. Year before, I think, was over 10%. So our flows so far this year in high yield have been mixed. Investors appear to be taking a wait and see. But it's been a very good asset class. Same with bank loans. CLOs also are getting a lot of flows in the high quality space. But we also launched a mezzanine type of exposure, BCLO, because investors want to modulate that exposure. So
help us with the yield, Paul. I get a blue button, Detroit Lions. 5% money market fund, Paul?
Yeah.
So how much do I pick up on CLO, and then how much do I pick up on mezzanine? I saw Mary Poppins from the mezzanine. How much do I pick up on mezzanine?
Well, so you're going to move up towards the 7, ish in more. So
seriously,
so last year, our AAA CLO returned over 7%.
That's nice. So who's a typical BlackRock ETF client? What's a typical BlackRock ETF client?
Well, it runs the gamut. So we have all the way, from official institutions just to individual investors. So we cover the whole spectrum of investors. And, it's interesting because a lot of people think that, bond ETFs in particular, that's retail. It's not. You have a lot of very sophisticated investors who use bond ETFs to manage risk.
And these these aren't passive ETFs. These are active.
Well, we have both, obviously, yeah. Okay. So the ones I've been mentioning, the AAA CLO, which is CLOA, that's active. Okay. We've talked about Rick Reeder's fund, BINC, that's active as well. But we also obviously have a huge book of business in the index space.
Our listeners and viewers know that you've lost money in bonds over X number of quarters, but in this short-term paper stuff, if you say you can pop 5 or 6 or 7-ish%, are there moments where they go down, they break the buck and go down?
In terms of the money
Could
markets
they go
or just
down
the cash
in
product?
price?
Sure,
No, I mean,
sure. It's
CLO
a floating.
or
Sure. Most certainly, it's a credit product.
It's a credit product.
Yeah.
So I don't think people know they can go down anymore.
I mean, what you're doing with products like CLOA and BCLO you're taking the duration risk off the table, right? So you do have the credit spread exposure, and credit spreads obviously can move. We are at reasonably tight levels for credit spreads. But what we've seen is an appetite to really kind of rein in duration because, as you know, we've round tripped on 10 years, a couple times towards 5%. So people
Paul,
are moving to the short
end. I mean, this is your world.
Well, I just want to know, again, we got folks like you, is there some funny money going into your part of the market? And if so, where does that go? Is it something that you guys are creating products because you're seeing demand?
Absolutely. I mean, what part of our innovation process is to really understand what toolkit the investors want. So the money market launches are designed to fill a gap that we saw in the space. And so, we're seeing investors this year really, they're coming in, right? Because like I said, we're off to a really good start. And that's positive, but they're also really still focused on, managing volatility and managing risk. And I think the flows kind of reflect that so far.
Does all the talk about tariffs and this and that, like all the noise that's out there, does that impact your flows?
It can. So far, we haven't really seen anything negative. I mean, if you look at 2-year break evens, they're up to around 300 basis points. So it's moved up kind of sharply. Market expectations of inflation, 10 years still below 2.5. So you haven't seen that much movement. But so far the flows have still been positive. We haven't seen investors back off of that. Again, they are kind of anchoring more towards the short end of the curve so far. But that's about it.
Yep, interesting. All right, Steve, thank you so much for joining us. Steve Lakery, Global Head of iShares Fixed Income ETFs at BlackRock. I mean, one of the absolute giants in that ETF business, focusing on the fixed income side of the market. And speaking of fixed income, Tom, the 10-year Treasury, we're down 7 basis points, 4.38%, below 4.4%.
The conversation here today has been extraordinary. Yes. We're talking bonds with Steve, and we're deciding which Black Sabbath to play.
That's how we roll here.
Yeah, this doesn't usually happen in financial media, folks. This is Lisa's fault. I mean, I look at Phil Anselmo. I mean, Lisa, what Pantera's been through, the injury, the death, it's been very difficult for Pantera. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul and Tom, Lisa Mateo here, Michael Barr as well. An eventful day. Usually we make jokes. There's no jokes because people know that grew up in this stuff that ice is worse than snow. Rob Carolyn joins us from Washington and Appalachia, all the way across to Pennsylvania and up into New England. Rob Carolyn, the level of ice that is coming, describe it.
Well, the good news is, Tom, it's not the type of ice storm that's going to produce record power outages or down tree limbs. The problem is going to be more for travel rather than transmission of electricity. We're thinking most areas will probably see less than 1/4 inch of ice accumulation. But as we know, even just a bare glaze on pavement is a bad thing. And that's going to be the problems later this evening around the district in Baltimore, especially north and west, as you mentioned, into Maryland, up into Pennsylvania. New York City, the precip really doesn't get going until after about 2:30, 3 o'clock in the morning, it'll be light snow. It looks like the suburbs may have some issues with some light icing tomorrow morning, so it could be a rough commute coming in from Rockland, Putnam, Westchester counties, and also out of northern New Jersey. And then Boston, the morning commute's okay. The snow doesn't really develop until after 9 a.m. It looks like an inch or two in Boston, then it changes to rain in the afternoon. But inland, north and west of 95 and 495 is where there'll probably be 2 to 4 inches of snow with a light glaze for the ride home on Thursday. Yes, so that's where the problems will be tomorrow afternoon. It'll be north and west of Boston.
What's the temperature? Is it cold there? Asking for Paul at the beach.
Right now, Boston is sitting at 21. It's 15 in Nashua. New Hampshire, we're looking at 28 right now in the city. And as I go down towards the district in Baltimore, they're currently sitting around 35 this morning.
So is this a fast-moving storm here, Rob? How long is this going to last for
It
folks?
is, Paul. That's the good news about it. As we've been seeing so far this winter, they've been quick hitters, so that limits the amount of precipitation. It's some energy dropping out of the Great Lakes. That's going to team up with some moisture coming up from the mid and lower Mississippi River Valley. So it looks like most areas are seeing probably like a 6 to 9 hour period of precipitation, and then it's gone, and we'll see rapid clearing Thursday night into Friday.
Do we get, Rob Carolyn, like records? Is February more snow than January?
Well, all we got to go back to 2015, Tom, when Boston had almost 100 inches of snow during the month of February. So it can be a very snowy month. We're into a very active weather pattern. The very warm air over the southern United States is battling it out with the very cold air in the north, and the storm track is right in the middle. Southern California got some beneficial rain, and all that energy is sliding east, and that's what's going to cause the storminess in the eastern United States tonight into tomorrow, and again Saturday night into Sunday, and then during next week.
Rob, for all of us, we're sort of beyond it, although we'll never be beyond it. To your coverage of the LA fires, thank you so much for all of us.
Oh, you're more than welcome,
Bloomberg
Tom. That's why
Surveillance.
I'm here.
It's just truly historic. Really appreciate it. Rob Carolyn, our Bloomberg Surveillance and Bloomberg meteorologist as well. A real lack of hysteria there, which is greatly appreciated. Paul, can we circle back to Disney?
Sure.
I mean, you believe they will return to the magic. You know,
I think what's going to happen. I think what's going to happen here is we're going to get streaming profitability, and that's going to end up being a
like
good business.
Spotify turned to profit finally.
Yes. And now the question, just overall, is all the great content that they have, is it more or less valuable today than it was 4 or 5 years ago, before the pandemic? That's a real question for folks longer term, because nobody cranks out the content better than they do. Nobody's got a better park business.
Do they buy in adult content and threaten the family brand?
They do a little bit of that under the Hulu brand. But to the extent that they want to ever bring in have it a one big Disney brand, no, I think they're going to try to keep that a little bit separate. That was a concern when they bought Fox, because Fox had a lot of that content that was non-Disney kind of content.
Lisa, major shout out. Your earnings coverage today was just brilliant. I mean, it's easy, folks. There's JP Morgan, that's all you talk about. Apple, that's all you talk about. Today it was like 7 different things. We've got a Disney theme. Alex Steele called me up and she said, "Oh, Tom, remember how Little Mermaid changed everything?" Yes, it did. Good morning.
What do they got? A lot of sand. We got a hot crustacean band. Each little clown here know how to jam here under the sea. Each little slug here cutting a rug here under the sea. Each little snail here know how to whale here. That's why it's hotter under the water. Yeah, we look here down in the mud.